No, I don't think you should be worried about that, Joe. Air in the airplane flows vertically. It flows from the top of the plane down to the bottom of the plane. And so unlike a restaurant or an office building where the air moves horizontally, it's pushing, your coughs or your droplets down. And that's a good thing. It's actually a safer air environment than most buildings we're in. In terms of cleanliness, planes have always been cleaned in the industry. But just like in your own home, my guess is that the countertops in your kitchen are probably cleaner today than they were a couple of months ago because you're taking more care about that. And that's what's happening in the industry. Everybody's being more careful. I'm actually encouraged, Joe, that there seems to be starting to be a coalescing of ideas around the industry to how to make customers more comfortable, like facial coverings that JetBlue started and the industry matched up on. There's now talks about some general consensus around temperature checking in the airports, the cleanliness at your own seat and things like that. Ultimately, customers are going to decide what makes them comfortable to be on an airplane yet. But I'm encouraged that the industry is sort of working together to try things that are going to get customers comfortable. Those things, along with low fares, will bring demand back.
Beck.
Hey, Ben, I think we eventually get back to some sort of normal world, but I hope we never get back to the point where you see people taking their socks and shoes off and putting their feet up all over the place. Maybe those days are gone, right?
I certainly hope they are, Becky. That's right.
Nasty stuff.
Yeah, it is nasty stuff. But, don't confuse middle seats with social distancing either. People have been doing that and saying, well, if I don't get my middle seat empty, that's not social distancing. Having an empty middle seat is great. I like that when I'm not traveling with my family anyway. And but empty middle seats, once there's demand for those seats, are going to get filled again. The important thing in an airplane is that nobody is sitting face to face. The airflow is really, really good. If everybody's conscious about their own space and what they're touching and not touching, I think we can get back to a normal at some point here.
I don't see how fares don't go up, Ben, because we finally thought the airlines, in terms of capacity, had figured it out, so that the planes had to have every seat full, and now just by definition it's going to be half full. So they get a little bit of a break with jet fuel prices at this point. But even after we help these players, there's going to be some that just don't make it, I think.
Well, I don't think that's true in 2020, Joe. Okay. You may be right if low demand exists for much, much longer. We don't know what's going to happen with air travel demand. And if that exists for much longer, there may be either consolidations or there may be failures or bankruptcies or something. But in 2020, I don't see an airline failing.
Okay. All right, Ben, we'll see. And we hope to see you again soon, too. Becky.
Same to you. Stay safe, guys.
All right, thanks, Ben. Thanks, Joe. When we come back, today's market moves. The futures this morning actually picked up since Andrew and I started fighting. Maybe we should do it more often. Futures right now for the Dow up by 44 points. When we come back, we're going to talk market strategy with the CEO of hedge fund giant Man Group. That is next right here on Squawk Box. We'll be right back.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more. To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time.
Get yours.
Investors are focusing on efforts to restart the American economy. We will speak to the head of one of the world's largest hedge funds about where you should be putting your money to work. What will the office look like after this pandemic? The CEO of WeWork joins us for a special interview on the steps that he's taking to ensure workplace safety and the future of the company. And Elon Musk at it again, this time defying a local stay-at-home order and reopening Tesla's California production plant, basically daring officials to come arrest him. He says, don't arrest anybody else, just me. We have the details coming up as the second hour of Squawk Box begins right now.
Good morning. Welcome back to Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Becky Quick and Joe Kernan. Take a look at U.S. equity futures at this hour. Let's show you where things are setting themselves up about 2.5 hours from now. S&P looks like it would open up about 3 points higher. The Dow about 40 points higher. And the NASDAQ looking to open, we'll call it about another 3 points higher as well. Joe?
We may remember today, we'll see, kind of a history-making day. The Fed's going to begin buying ETFs, in this case, corporate bond ETFs. That's the first time ever. The goal is to direct money into credit markets faster than it could by buying bonds. Joining us now is Luke Ellis, CEO of Man Group, one of the world's largest hedge funds. Do you wish you were in charge, Luke, of the Fed? Or are you happy just to comment on it? I'm glad I'm here commenting.
Yeah, I think they had a pretty impossible job. I mean, I was listening to your bit where you all got quite excited at the beginning today. The reality is the Fed and the government had to throw money at the problem, given we have a really dramatic recession going on in the real economy. But it's almost impossible for them to do it in a way which doesn't create moral hazard. It doesn't create some problems that we have to deal with later.
Right. Maybe not quite as much moral hazard. I guess the argument can be made that, you know, if you were the smartest CEO in the world, you'd have pandemics on your list of things you need to prepare for. Maybe you'd have a stronger balance sheet, I guess. But you know, we SARS never, you know, didn't turn into that, and MERS didn't turn into that, and you know, it's been 100 years. I mean, the moral hazard is not as much as when it seems to be something caused by what people would have called greed or speculation or a housing bubble or any of those things. I mean, it's not quite the same, is it?
Well, sort of it is. I think the reality is the trigger this time was a pandemic, and you know, obviously that came out of left field. But the reality is, if you look at 2008, what we learned through the course of that was that banks ran with much too levered balance sheets and with no ability to withstand stress. And the government had to step in and help them. And since then, banks have been, through regulation, have run with much less leverage and abilities to withstand quite big stress tests. What's happened over the last 10 years is that excess leverage and the lack of ability to withstand a stress test has moved onto corporate balance sheets. And so we've ended up in this thing where you have a lot of companies that just weren't in a position where they could withstand any sort of shock to their business. Clearly, a pandemic has been a somewhat unique type of shock in our experience, but a shock nonetheless is something, I think coming out of this, regulation is going to force companies to run with much more conservative balance sheets.
If you ran a cruise line, how would you have prepared for a pandemic? If you ran an airline, what should CEOs, what should they have been doing to prepare for a total shutdown of their business for 6 months? How could you have prepared for that?
Yeah, no, look, I understand. At the same time, you've got to run with, if you look, it's not like this is the first time that airlines have had to run cap in hand. So sort of airlines are constantly running out of cash at the same time as doing buybacks and running very levered balance sheets. I think, even if you pick the couple of industries where it most carefully hit, if you look, the big problem is so much of the economy has run with very little margin for error. And, we're suffering for it now.
No, okay. So when the way you run your business, you de-risked early because that's what man is known for, and you make the point that a lot of times the momentum trade is more important, for example, than the value trade, and that you said that last time you were on. That was early in the pandemic to not buy in. Did you, with that strategy, did you buy any of this dip, or are you still totally out even after the market's rebounded 35% and the S&P is just down 13% now? So you bought at the bottom then?
No, we didn't buy enough at the bottom, of course we didn't. But the good thing was we got ourselves in a position to make pretty good money out of the first leg of the move and not to give it back in the second leg of the move. And so, overall, we've looked after clients' money pretty well through this.
Have you done anything other than conserve money? Have you reinvested any of the money you conserved at this point? Since we've come back 35%, we're now only down 13%.
Yes, but I think one of the ways of looking at it is probably we took, in the sort of classic portfolio that looks at a 60-40 world, we took risk. We took gross balance sheet down by about 95%. We've gone up by 400% since then. That sounds like a big thing, except, of course, that still gets you to a balance sheet that's a third or a quarter of the size it was before all of this, just because volatility still hasn't really settled down in markets.
You could end up, going back in well below the previous lows for all we know, depending on how the virus plays out. Becky, you have a question?
Well, that was my question. Look, you said you bought at the bottom but didn't buy enough, and you answered it a little bit in your answer already. You don't necessarily think that was the bottom. You think there's a second leg. How do you think it plays out?
Well, again, I think part of the process we look at with momentum is it wasn't that we bought at the bottom, but we bought as things started to come back up. That's part of the point about momentum. I don't think it. I don't think we have a great ability to predict exactly whether we're going to meet new lows or not. But we've had a battle here between a massive injection of capital from governments and central banks offset against an incredible recession going on with, pick your number, but 22 million people unemployed, which has real consequences. And we've found some sort of equilibrium here in markets for now. I think the bit that would worry me is that it feels like the buyers are running out of steam. The buying is getting more and more concentrated into fewer names in the stock market. And, we're heading into the summer, and generally you see less buying in the summer. On the other side of that, the supply continues to be enormous, whether it's the Fed is going to issue record amounts of treasuries, whether it's we saw the biggest secondary ever last night. I think it was the biggest ever anyway. On BlackRock, we've seen companies issuing debt left, right, and center, and are going to keep pushing the thing. And I think the worry is that you get into one of these summer swoons where, we've still got people issuing, we've still got that side of it, but we haven't got any buyers left.
Hey, Luke, you're going to hear from a lot of people that the Fed and the central banks, as you mentioned, it's all this money that they put in to support the markets that really prop things up. You will hear from all kinds of people, politicians in particular, saying that that was a bad move, that it was helping Wall Street, that it was not helping Main Street. What would have happened if the Fed and the central banks hadn't done these programs to prop up the markets?
Look, we certainly would have ended up in a proper mess where we had a financial crisis to add on top of the economic crisis. I think they had to do something. They had to do things that were dramatic in order to stop it turning into a rout. But I do think there's a worry that it's turned into trying to stabilize individual parts of the market as opposed to stabilizing the system. That couple of days where the Treasury market ceased to function in any sensible way, the Fed had to come in and do something, because if you can't price Treasuries properly, you can't price anything else properly. And that was obviously the beginning of a base put in. But I do think they need to be very careful of ending up in the place where maybe you could say the Bank of Japan has ended up, where they're constantly trying to pick almost individual securities to support.
So, I mean, what I read in everything you're saying, Luke, is do everything you need to do. You got to do it, but just prepare for the backlash, because you're going to hear it. So I don't know whether that's fair. I guess it's just real. Anyway, we appreciate it. Yeah. And you've got 105. You got a lot of money under management, and you still not a gray hair on your head. I'm not really sure how that works. Anyway, thanks a lot. Appreciate
Thanks,
it.
Jeff.
All right,
thank you all.
See you later. Thanks.
All right, when we come back, walking the path forward in a pair of fine Italian shoes. We'll talk to a Boston-based company that imports footwear made in Italy. And with that country opening back up last week, they are hoping business will come back. We'll hear from the CEO right after this break. Plus, Elon Musk reopening Tesla's California plant, defying orders meant to stem the coronavirus spread. We have the details in just a bit. Squawk Box will be back after a quick break.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening. While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic Game Replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. Not all heroes wear capes, but most wear tights. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis of the latest wrestling storylines, turn on the WWE podcast.
Big Steve edition.
Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
Because now on the show, everybody's kind of the same size, but as soon as I saw you, it's been...
For these and more, search sports and scroll down to the world of wrestling.
It's TuneIn Sports on this day. On this day in 2013, during the 40th Players' Championship, Tiger Woods wins his second title by 2 strokes.
Tiger Woods is a Players' Champion again, a dozen years removed from his first. And he just saw it.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and
Welcome back, everybody. Last night's Rise Up New York virtual telethon, sponsored by Robinhood, raised $115 million for those in the Big Apple in New York State. That telethon was hosted by Tina Fey, and it featured messages and performances from a star-studded cast, including Jimmy Fallon, Jennifer Lopez, Mariah Carey, and lots of others. In fact, I have to say, Robert De Niro at the entry, he nailed it. He had me in tears already, and I went directly to go donate, just based on the appeals that these people were making. All of the donations are being used to support the need for food, cash assistance, healthcare, and shelter for those most in need during this pandemic. And Andrew, I'm sure you watched it too.
It was really quite special and extraordinary. We've all been to the gala in person, and I thought that they topped it last night, and the need is real. So glad that so many people watched and so many people donated. Meantime, I want to talk about small businesses this morning because Italy just opened for business last week. That's good news, though, for a company closer to home. Gemini is a Boston-based online retailer whose line of designer shoes are manufactured by small artisanal factories in Italy. Its co-founder and CEO, Ben Fishman, joins us this morning. Ben, should also say, is the founder of Rue La La. Anyway, it's nice to see you, Ben. Help us understand what the last couple of months have been like and how opening in Italy, the reopening in Italy, has changed business for you.
Yeah, thanks for having me, Andrew. Big news for us last week with Italy reopening. We started this business 4+ years ago with the idea of putting Italy back on a pedestal as a manufacturing community. They make this incredibly unique and fabulous product, and much of the world was leaving Italy to manufacture product in areas that could be done at lower prices. We went there to put it on a pedestal and had seen great success, and then obviously we were hit with this terrible virus, and we got hit two ways. One is the consumers stopped spending pretty dramatically on our type of product, and two, Italy shut down. And with Italy shutting down, so did our flow of inventory. But last week, with Italy opening, very, very quickly, things turned around from a manufacturing perspective. They actually got back to business last Monday, and our first shipment of goods it was shipped out of Italy on Friday. So big news for us as far as getting that inventory flowing again.
But speak a little bit, though, about the other side of it, which is the big question for a lot of people, the demand picture. I happen to be wearing sneakers today. I typically, when we're on the set, am wearing a nice pair of Italian shoes, in fact. So the question is, if people aren't going to be going out as much, what's that going to do to the demand picture for you think?
Yeah, so I think for sure demand has changed. We're actually still selling product, but it's a very different type of product. So we do make Italian sneakers, and our sneaker business is quite strong for men and for women. The dress business is very soft right now, and we don't foresee the dress business coming back in any significant way anytime soon. So we're focusing on comfort product. We're also a little bit apprehensive with what happens when the world starts to reopen and the amount of inventory that's out in the market and the level of discounting that's going to take place. So not only is consumer demand different and are people wearing sneakers and not dress shoes, but there's going to be a lot of product at very low prices out in the market, we believe, for a very long time. So we're paying close attention to that and watching that. Luckily, our product is sold at a pretty unique price point, but it's going to be a pretty interesting time for consumers to find value and for brands like Gemini to make sure that we can maintain our business and our margin at levels that we need to survive.
What's happening to the customer acquisition cost, since most of this for you is online and direct to consumer? You hear about ad rates coming down, but then again, there's the demand picture. So how's that changed for you?
So CPMs, ad rates on all the major channels are lower than they have been before. The difference, though, is conversion is also lower. What does that mean? So you see ads on Facebook, you see ads on Instagram, you see ads on Google, and you click on them. But is the consumer buying at the same level? No, they're not. So yes, you're getting eyeballs. No, that's not necessarily leading to sales. So businesses like ours, Gemini, we're focusing on as much as possible trying to leverage our customer file. But once again, low CPMs for us does not mean high sales. In fact, low CPMs with low conversion gets you to probably a pretty negative spot.
Have you seen any shift in terms of which service is more useful these days? Has a greater efficiency? I mean, has anything changed? People keep talking about us all being at home. Is Instagram working better than it used to, or Snap all of a sudden, moving to the top of the spot?
So we're finding content. It used to be that when you wrote long content on the internet, people would say people don't have the patience for that. It's a soundbite economy. And we actually are seeing that content advertising, telling stories, explaining what you do, how you do it, why you do it, is working better than ever. Whereas 3 months ago, short ad, big picture, move quickly, that's what worked. Storytelling, engagement is working better than ever for us right now. And we're looking for new venues to do that, actually, which really opens the door. When a brand can tell a story, you can create some unique engagement.
Okay. Ben, we wish you all the luck in the world, and we hope to keep track of your progress and hope you come back on in a couple months from now and let us know how you're doing.
Yeah, look forward to you putting those dress shoes back on.
Appreciate it. Thanks. Joe, over to you.
Thanks, Andrew.
All right, coming up, Tesla's Elon Musk restarting a California factory and says if it happens, he's ready to be arrested. Phil LeBeau has the details. And then later, the CEO of WeWork joins us to discuss the steps he's taking to turn the company around after its failed IPO. Maybe have some other issues dealing with in addition to that. Check out the futures ahead of the open. We are now up almost triple digits, up 87 points, not quite, 87 points on the Dow, S&P, and NASDAQ both indicated higher. Squawk Box will return right after a quick break.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Not sure what to listen to next? Well, here's this week's top 3 things to listen on TuneIn. Oh, it's back. One of the biggest podcasts of all time. Join Ira Glass every week for news stories and experiences exploring this American life. We've got the 2020 NFL schedule. Search NFL to get the latest news and what your team is doing. Looking for some good music? How about Mi Casa Es Tu Casa? Latin music live streaming happening every Friday on TuneIn. Find these and more trending audio on the homepage of the TuneIn app.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Hey, it's Jacoby here from Jalen and Jacoby, and after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series.
Credit.
Welcome back to Squawk Box this morning. Making headlines right now, PNC Financial will sell its 22% stake in asset management giant BlackRock. PNC CEO says the time was right to, quote, unlock the value of its investment. Becky.
All right, thanks, Andrew. Elon Musk is escalating his fight with the California county, restarting a Tesla factory in Fremont despite a stay-at-home order there. Phil LeBeau joins us. He's got more on this story right now.
Becky, yesterday a lot of people were saying, would he really start up production? And based on the number of vehicles and what we're hearing from people who work at Tesla, reports from those people, either they've tweeted out or made some comment, yeah, they had production restart yesterday. The lot was certainly full with a number of vehicles there. Elon Musk in the afternoon yesterday basically took to Twitter and said, we're starting back up. We're not going to sit here and wait any longer for the county. He tweeted, Tesla is restarting production today against Alameda County rules. I will be on the line with everyone else. If anyone is arrested, I ask that it only be me. To our knowledge, nobody was arrested, certainly not Elon Musk. Here is the county supervisor talking about their ongoing back and forth with Tesla.
I wish Elon would have waited one more week so we could have just done this in a methodical fashion that really put people back to work safely.
This back and forth between Alameda County and Tesla led to Musk tweeting yesterday, yes, California approved, but an unelected county official illegally overrode. Also, all other auto companies in the U.S. are approved to resume. Only Tesla has been singled out. This is super messed up. By the way, that was not a tweet from yesterday. It was a tweet from over the weekend. Bottom line is this plant was closed for 5 weeks. Elon Musk has said, look, we've put the safety protocols in place. We're ready to restart production. We still haven't seen anybody arrested, and it's unclear whether or not Alameda County guys will actually take an enforcement action. It's one thing to say you haven't met the rules. It's another thing to say send the sheriff out and block the entrance or tell people they can't go to work or arrest somebody. That hasn't happened yet.
Hey, Phil, thank you very much. Joe, Andrew, where do you guys come down on this?
I know Schadenfreude. I just like when certain people that really love Elon and he does things that are just totally anathema to how they feel. So I just enjoy it, actually, I guess. I have started liking him a lot more. I started liking him with the flamethrower. Then I liked him the next time he did something else. What was it, Andrew? I mean, as the original.
I don't know.
You love him because he's saving the world and all.
No, I love him because I think he's actually changing the world.
You've even been tweeting nasty things. You've even been calling him out on being wrong about the COVID virus and not. But
I don't love this.
I know
I
you
don't love this. Only because I think there's a rule of law issue here.
Right, but California opened it though, so you're siding with the unelected county official. You think
I'm siding with the law.
Okay.
I'm siding with the law.
As you always do with sanctuary cities and everything. Okay. Anyway, still to come on Squawk Box. Former White House Chief of Staff Bill Daley joins us to discuss the reopening of America. And then a special interview with the man tasked to turn things around for WeWork. CEO Sandeep Mathrani will be our guest. Squawk Box coming right back.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL Show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more. To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
Welcome back, everybody. From Main Street to Wall Street, everyone is watching the reopening of the American economy. And in an effort to try and jumpstart things, the White House is considering a number of stimulus measures, including a payroll tax cut. Joining us right now to talk about that and much more is Bill Daley. He's Wells Fargo's vice chairman, and he is also a former White House chief of staff and U.S. Commerce secretary. And Bill, it's great to see you today.
Nice seeing you, Becky. Thanks for having me.
Let's talk through things both on the national level and at the bank level. Maybe we start just with Wells Fargo, because I think what you all have been seeing is a very good reflection of what's really happening out there. I think you all have about 7% of the small businesses in the entire country that you do business with. And I just wonder if you can kind of give us a feeling for how things are going with that, how businesses are doing, and how the bank is doing in terms of being able to get help to them.
Well, we have been able to give our customers a tremendous amount of help, probably around $4 or $5 billion of accommodation so far to a couple of million of our customers. But this is obviously extremely difficult time in a very short period. When you look at where we were the end of February, even though there was the concern around COVID, our economy was still doing quite well. And in a period that we've never seen this sort of thing, a collapse in many ways of many sectors that are vital to keeping us and the nation we've been. So this is tough for our customers. We're doing everything we can to accommodate them, whether it's the PPP program, whether it's accommodations on our own. So we're all working together. And I think this is obviously unprecedented times. And where this goes, how it goes over the next number of months is unknown. But we're trying the best we can to try to accommodate our customers, which are customers and employees are the two most important things to us right now.
Yeah, Bill, let's talk a little bit about that. Nobody knows exactly where this thing is going, but as a bank, you all have to be looking at this and trying to figure out how many of the customers that you serve are still going to be going concerns at the other end of this. What type of long-term potential do you think this has at this point? And obviously things could go in different directions, but is there a range that you all are looking at thinking, okay, if things don't open up by here, then X number of customers are going to be really pressed to be able to come back?
We aren't at that point yet. We are still predicted in this quarter we shall see a rise from last quarter and also a rise in the fourth quarter. So we think there's going to be progress from the collapse of the second quarter, but it remains to be seen. We are all trying to figure out not just when we go back, how we go back. There may be some opportunities for some businesses in that as we all try to prepare for how we go back. We're doing that right now we have over 200,000 employees working from home. We never envisioned such a thing, nor did many other companies. So how we bring them back and service our customers at the same time is a big challenge for us. We are not going to be rushed either by some political drumbeat or other things. It's going to be about the safety of our employees and our customers. And right now, we're obviously servicing our customers. And that's the most important thing we can do right now, to keep the economy moving and to be there for them.
You said you're not going to be rushed back by a political drumbeat that's moving. Right. So what authorities do you all listen to? Who are the experts that you're consulting with to try and figure out when's the right time to come back?
We're talking to the health officials throughout the country and local areas. Obviously, there are some parts of the country that are not affected anywhere near what other parts of the country are. So we're going to have to make judgments. But the most important thing will be how we go back. And it will take time to reconfigure our offices, reconfigure some of our places of business. And as I said, we never envisioned 2 months ago that we'd have over 200,000 employees working from home of the 270,000 people that we have now. Many of our employees have to go into the branches, have to go into certain offices. But I think this will be a gradual comeback. And what we all want to do is do it the right way, which is each company is going to have to make that judgment around how they bring their employees back and at the same time how they're servicing their customers. a big challenge. And I don't think our attitude, I know Charlie Sharp's attitude is, we'll make the decisions for our employees and our customers, and will not be pushed back into some rush either by the political system and the winds of the day. The medical experts will have to give us confidence and know that the procedures we put in place are the right ones, even though we're all in uncharted waters, the right ones to keep our employees safe and then our customers.
Hey, Bill, you've served as chief of staff in the White House. There are all kinds of different discussions that are taking place right now to try and figure out what comes next, whether there are additional funds that will be sent to small businesses, whether there are additional funds that will make their way to the states or local municipalities, and whether there should be a payroll tax cut. What do you think of any of these plans?
Look, I think there needs to, I don't think there'll be another small business relief like a third version of PPP. I think you're going to see the Democrats put together a very aggressive piece of legislation around sort of the debate you and Andrew had early this morning. Do you try to get more relief in a direct way to certain people? And I think you're going to see a big push by Democrats for that. I think you're going to see this a pause by many Republicans, or a desire to have a pause by Republicans, and see what impact the relief that has been given. And you've got to give credit to the congressional leadership and the members for the amount of action they took in such a relatively short period in March. It really was unprecedented to see Congress come together, put together a couple of $1 trillion package to try to help bolster our economy and bring relief to the healthcare system, which we feared greatly would be stretched. And in parts of the country, it is being stretched enormously.
You're a Democrat. What do you think the right answer is? Should there be more money that goes directly to consumers? Should there be a universal basic income that comes down?
I'm not there for a universal basic income yet. I believe we've got to bring more relief. I think right now the immediate problem is our states and local governments are really stretched because of this crisis and not using that to try to solve their long-term problems, but to try to really address the enormous costs that are going on and the depletion of their revenue. If you have any taxes, any revenue that's based upon sales tax or other taxes, that's gone right now. And I think it's going to be very slow to come back. And so the enormity of the cost on our public systems are really have got to be addressed by Congress in a relatively short period, in my opinion. Or it just compounds and gets worse and worse.
But you also understand how the banks. Oh, sorry. You're a Democrat. You understand how the banks works. You've been a chief of staff and tried to figure out how policy can address these things. We saw a huge backlash after 2008, 2009. There was a backlash against the Fed, against the government for taking the side of wealthy people and creating advantages to people who had money and leaving others behind. That's why there's still such a rift in this country. The moves that the Fed has taken, I would argue, have been moves that were very important to stabilize the markets. But I think there's going to be an even bigger backlash that comes from this. What do you do?
Well,
how do you prevent that backlash? How do you deal with it?
Well, the backlash is really based upon the inequity that's risen in our society over the last 30 years, really. It's not over the last 8 weeks, obviously. That's the heart of it. 2008 stretched it because there was a financial crisis caused by the financial system. This is not. This is a pandemic. I think it is very different. I think that's why companies like ours and so many others are out there trying to be there for their customers, for their employees, with a very different attitude than I think they had, or at least were postured as having in 2008. And that was sort of, you've got to help us. Now we are aggressively out there trying to be helpful. You know, we've done 150,000 of our customers have gotten PPP loans. 80% of them have less than 10 employees. We're not taking fees for that program. That's taxpayers' money. We're going to work with those customers to turn them from loans to grants. That will help bolster that for us, 150 or 150,000 or more customers throughout the country, all 50 states and Puerto Rico, we have had guarantees for. So I think the business is stepping up in a very different way than they were viewed. And Wall Street is, and the big banks and the regional banks and the small banks. look at the number of small banks who got into the PPP program in the first go round for their customers. So I don't think that sort of rub is going to be there that we're bailing out Main Street, and then Main Street's not helping the little guy. I think that's different. Now, I think you're going to see a Democratic plan that probably does some sort of direct more payments than just what was done with the stimulus checks. There's a move afoot to try to have some sort of basic income for certain people. Whether that's a good or bad idea, I watched the two of you debate that this morning, and when I woke up, I knew the world was upside down when I saw Joe sitting in between the two of you. Couldn't believe it.
It is a complicated debate, very nuanced debate.
Yes.
Bill, we appreciate your voice on this, and we'd love to have you back again to talk more about it.
We will. Thanks, Becky. Have a good day. Stay healthy.
Okay, you too. Take care. Andrew?
Okay, coming up, but when we return, managing the workspace during a pandemic, the CEO of WeWork is going to join us to discuss the steps that company is taking at its facilities during the pandemic. We'll come right back with him after the break.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from
Did somebody say just me? Get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they get the pickle in.
It's ready to go.
One time on the catamaran.
Shipping like we're cut in half.
Noodles and noodles.
Like
Thank you, my man.
ShipStation, the number one choice of online sellers. Go to ShipStation.com/TV and get 2 months free.
When allergies attack, the excitement fades. Allegra helps you say yes with the fastest non-drowsy allergy relief for 24-hour relief for 24 and outdoor allergies. Indoor and outdoor allergies to life's possibilities. To life's possibilities. Allegra, live your life, not your allergies.
There's only one Mark Cuban.
That's what I'm talking about.
And only one
I feel the big one. Oh, yes, so fully.
Shark Tank.
I can't keep on saying that.
Shark Tank, tonight starting at 8 Eastern. CNBC, get yours.
Welcome back to Squawk Box. CNBC is hosting a virtual event today featuring top healthcare CEOs, technologists, and investors. The goal is to explore the ways that companies are approaching the coronavirus crisis and its lasting effects. Last night, Jim Cramer spoke to one of the many great panelists that will be joining us. Jim spoke to the CEO of Bristol Myers.
This is a time for our industry and companies like Bristol Myers Squibb to step up to the challenge, work together, and demonstrate what we are capable of when we work together. That's our industry. That's what we stand for. That's what we are. And this is a time in which the value of science and innovation is becoming very clear.
To access today's event, go to cnbcevents.com/healthy returns. Becky.
All right, thanks, Joe. When we come back, WeWork CEO Sandeep Mathrani will join us for a special interview. That's right after this break. We'll be talking workplace safety, commercial real estate, and the future of the company. Stay tuned. We'll be right back.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
This shot's going broken again. Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time,
force camaraderie. And you should be mad at tech that makes things worse. But you're not mad, because you have E-Trade, whose tech makes life easier by automatically adding technical patterns on charts and helping you understand what they mean. Don't get mad. Get E-Trade's simplified technical analysis.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on
Lively.com.
Looking to reopen, many companies are rethinking how their offices are designed for employee safety. WeWork is rolling out changes to its co-working spaces across the globe. Joining us now in his first TV interview as the CEO of WeWork is Sandeep Mathrani. Good morning to you, Sandeep. Thanks for joining us this morning. It's nice to see you. This pandemic on its face appears like it would be very, very difficult for the world of commercial real estate and especially the world of office space. But there's a contrarian view that I know you have and some others do about what this may do for companies like WeWork.
Good morning. As I listened to Eric Schmidt over the weekend on Face the Nation, the ex-CEO of Google, and he said, in this pandemic, social distancing is the norm, and effectively, we will need more office space, not less. I'm a firm believer of the same. It's speaking to many of our enterprise clients. They're seeking more space to make sure professional distancing becomes a norm. WeWork is the key to WeWork is flexibility, but flexible in space, flexible in time. We believe in the hub and spoke model. Our enterprise tenants are telling us that effectively they need a hub and spoke model. The spokes need to be closer to where their employees live to minimize the amount of time it takes and commuting time it takes to get to the office. We've learned extensively from our experiences in China, where we have over 100 buildings, on what it takes to create best-in-class spaces for professional distancing, for HVAC systems, for sanitization. And we spent the entire month of April spending tens of millions of dollars getting our spaces ready for when people can get back to work. I want them to feel safe. I want them to feel as if they are in their own homes. So we're pretty encouraged with the planning that we've done to encourage the employee workforce back to work.
Sandeep, that's the question, though, because the conventional wisdom is that WeWork has always been about community. about bringing people together, even people that don't necessarily work at the same companies together for that community. But in a social distancing world, how many of those people are going to prefer, given that they're in relatively white-collar jobs that can be done on a laptop and a telephone, that they're going to prefer to do those at home if they're not going to do them at the traditional office that they would have otherwise gone to?
So actually the key to WeWork is flexibility. It's flexibility of space, flexibility of time. On the contrary, the only place that we can actually make space flexible, and if you actually come visit our WeWork locations, you'll see that people can sit 6 feet apart. There's distancing available. It's very easy to reconfigure our spaces to make it safe for the employees. It is not conventional space where you have walls, you have cubicles that cannot be relocated so quickly. And as I was listening to some of the earlier players on your show, one of the questions was, how do we reconfigure the space? Again, you should think of us as flexible. Flexible means you can de-densify, you can spread out the locations and people come to work. I've been going to several WeWork offices over the last few weeks, and it's encouraging to see people come and to sit in these open spaces 6 to 8 feet apart. So as a matter of fact, the key word for us is flexibility, and collaboration can still occur while keeping your distancing.
Right. Sandeep, what does it do, though, to the economics of your business, even if you're able to fill all of these offices at, let's say, I don't know, is it a 25% or 30%? We've talked a lot about what's happening, for example, at Disney. It's one thing to be able to reopen. It's another thing to be able to get to a significant enough group of people who are there to make each location profitable.
So it's a very good point. We ended Q4 with about 740 locations. We're ending Q1 with about 830 locations. One thing that happened, that's fortunate, is that we had this additional supply that came online at the very right time. So in our case, the way we look at it is that effectively this gives us an opportunity to increase occupancy, and therefore we should not impact much of our economics. We took a period of time, almost 18 months to 24 months, to mature these buildings. And so if you've got 60 additional buildings with capacity to mature over a 24-month period, occupancy is more the important factor than actually occupancy per square foot from a rent perspective. So we do believe, at least because of our ability of where we sit on an occupancy range, that effectively economics will not drive our decision to create a safe environment for the employees.
The other question, when it comes to safety, there was an article in today's Wall Street Journal talking about elevators. How many people can go in an elevator? In fact, there are people developing or thinking about an elevator for one. How does that work? And how are you thinking about it?
So again, looking at what's happened in China, we've been able to see where people are taking 4 people per elevator. You essentially time where people can come in. It's almost like commuters. When you commute, you pick the best time to commute to make sure the traffic is the least for you. I think over a period of time, people will get used to, the times where elevators are busy, where the lines are busy. People will phase out their timing. We're also fortunate, actually, in 40% of our buildings, effectively we sit, lower in the building, whereby people could use, stairwells as well. So that happened sort of by default when we took real estate lower in the buildings, and that also helps the commuter come into the buildings without much traffic. And so again, I think the fortunate part of being flexible in our office space, our location within the buildings allows us to be more nimble when it comes to serving our employees.
And then the other question, this idea of a sort of distributed workplace, how much do you think that improves the cause for some companies? Because the question is you could argue either everybody should be at home or everybody should be at the office, but this sort of midway strategy or middle ground strategy, does that advance things for a big enterprise company that may want to only, or may put, I guess, a handful of people in Brooklyn so they don't have to travel into Manhattan, if in fact that's the kind of thing we're talking about here?
So again, looking at our own workforce and trying to see how we bring them back to work, we find it to be it doesn't really work if you have an A/B system, as you just said. If you have teams that stay at home and working by Zoom and other teams that come to work. And so, again, the aspect of being geographically distributed, going back to that hub and spoke model, bringing teams together, so they can work in packs, even if they're in different offices, is actually the way I think people will come back to work. I think there's all or nothing, but it's going to be scaled because no one wants to rush. We ourselves are bringing in 25% of our people week one, and then we'll see after 2 weeks we'll bring another 25%. Again, having our own geographic distribution, we're able to accommodate our colleagues to come back and spread out throughout the city and throughout the boroughs of New York City. So I do think actually the aspect of WeWork, having that flexible space, being geographically distributed within a city and around the world will actually be an advantage. And enterprise clients of ours are reaching out and saying, you can provide something to us that we really can't provide ourselves, which is that professional distancing and geographic distribution closer to our employees. So we actually do think this could be a silver lining that actually will help occupancy of our new assets to be brought online in the first quarter.
Hey, Sandeep, Adam Newman, the founder of WeWork and the former CEO there, is suing SoftBank for walking away from that $3 billion tender offer. Where do you come down on that? Obviously, the situation has changed from when the tender offer was made, but what's your position?
So, again, SoftBank has provided about $5.5 billion of liquidity to WeWork from the fall of 2019. That gives us enough capacity to operate our business. We sit with over $4 billion of liquidity today, and effectively we've been able to right-size our organization. We've been able to improve by leasing our assets. We're on our path to profitability in 2021. The $3 billion tender offer has to do with existing shareholders. It's noise in the background as far as I'm concerned. My focus is to right this ship, and it doesn't really take up our time or our energy and focusing on a lawsuit between existing shareholders and SoftBank. We're focused on righting our ship.
Hey, Sandeep, the other question I wanted to ask is, are you paying your rent, and how many of your customers have called you up and said, wish I could, but I can't pay my rent this month?
So, a good friend of mine, Jeff Blau from Related, said, if you can pay your rent, you should pay your rent. So I called him up and I asked him a question. I said, what should I do? He said, the places you make a lot of money, you should pay your rent. So I'd like to sit back and say I followed his advice. We've paid our rent in over 80% of our locations in April and May. The remaining locations, we're just in discussions with our landlords in a friendly way. And therefore, we plan to make whole on our entire obligation. I do believe in the trickle-down economy. If I stop paying my rents, the landlords can't make their mortgage payments, and then it's a domino effect. On the collection side, we've collected over 70% of our rents in the month of April, and we are working with small, medium businesses in deferrals, freezing of rents, and different aspects with them. I speak to them myself. On Saturday, I spoke to a gentleman out of Los Angeles and worked out an amicable solution. Yesterday, I spoke to a gentleman out of the London office and worked out an amicable solution. So we are working with those who can't afford to pay rent in deferring their rents over a period of time and accommodating to create a win-win situation.
Okay. Sandeep, we appreciate you taking the time to speak with us this morning. We hope to follow your progress and hope you come on back as things move forward. Thanks again.
Thanks for having me. Have a great day.
You bet. Thanks.
All right, coming up, another big hour of Squawk Box, including the CEO of General Mills. Stay tuned.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Not sure what to listen to next? Well, here's this week's top 3 things to listen on TuneIn. Oh, it's back. One of the biggest podcasts of all time. Join Ira Glass every week for new stories and experiences exploring this American life. We've got the 2020 NFL schedule. Search NFL to get the latest news and what your team is doing. Looking for some good music? How about Mi Casa Es Tu Casa? Latin music live streaming happening every Friday on TuneIn. Find these and more trending audio on the homepage of the TuneIn app.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
This shot's scored, broken again. Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunningham to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Introducing a new podcast, ESPN Daily, hosted by me, Mina Kimes. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily.
Breaking news. Tech stocks powering the rally on Wall Street. The Nasdaq's on its longest winning streak since September, and the futures are once again positive. This as the Fed gets ready for an unprecedented move into the corporate bond market. And what does the auto industry need to weather the biggest crisis since the Great Recession? A bipartisan pair of representatives from Capitol Hill pitching a solution. We'll talk to them both. And we'll talk about Elon Musk's standoff with one California county that says he shouldn't restart Tesla production lines. Well, Elon's already ignoring that. The final hour of Squawk Box begins right now.
Good morning, everybody. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. We've been watching the markets this morning, and things have turned around. In fact, the U.S. equity futures at this hour, you'll see the Dow is up by over 100 points, 110 points right now. S&P futures up by about 11 and the NASDAQ up by 28. Yesterday, the Dow closed down. Both the S&P 500 and the NASDAQ closed higher. I've also been keeping an eye on Treasury yields this morning, and so far it looks like the 10-year is yielding above 0.7%. The latest tick, 0.708%. Oil prices have also been moving higher this morning. If you've been watching that June contract for WTI, last I saw it was up by over 3%. And yeah, you're talking about WTI above $25 a barrel at $25.52. Joe?
I expect Detroit's big 3 automakers are gearing up to restart some production next week after closures from the coronavirus. Ahead of that, Democratic Representative Debbie Dingell and Republican Fred Upton, both of Michigan, are asking for financial support for the auto industry. In a letter to House leaders that will be released later today, they write, in their words, the projected economic fallout for the industry is grave. Many businesses in the industry face a cash crunch even as they prepare to ramp back up. Liquidity is challenging, particularly for suppliers, and it will be necessary to support demand for some time to ensure a meaningful recovery. In some regards, challenges that the industry faces exceed those of the 2008 financial meltdown. Representatives Dingell and Upton join us in a really kind of a heartwarming show of bipartisanship in what is rare nowadays. Congress people, thank you for joining us. I appreciate it. Who wants to start? Congressman Dingell, this, in a perfect world, companies aren't supposed to need this repeatedly. Why does it make sense in this situation? I'm not sure she can hear me. How about then you can start. Congressman Upton, did you hear the question? Why does it make sense in this situation?
I did. Look, 1 in 7 jobs across the country are auto-related. Now, we saw news this morning, Toyota is expecting that their profits are going to be down 80%. Now, we're looking at millions of lost car sales this year. And we need to help. So Debbie Dingell and I have helped lead an effort in the House. We're going to be submitting a letter to the Speaker and to Kevin McCarthy, the leader of the Republican side, signed by nearly 75 members, bipartisan, that we ought to make sure that this next stimulus package needs to address not only the auto assembly folks, but the auto suppliers, the whole supply chain, because this is a critical industry, a manufacturing industry that America needs to have.
Yes, and are you, Representative Dingell? Can you hear me now? And maybe you'd like I actually addressed the first question to you. Why does it make sense in this case? You say?
Well, the fact of the matter is that there are more than 10 million jobs. We're still 5% of the private industry economy in the United States, and I want to make it really clear: the auto industry isn't asking for a handout in any way. They're asking for a handout. The fact of the matter is that there is an ecosystem that starts with the worker. Then you've got the OEMs, the car companies themselves, the suppliers, and the dealers. And there are a lot of, when you get to the supplier community, there are jobs in every state across this country. So we are worried about the economy. The auto industry is still the backbone of the American economy, and we just want to make sure that, as we talked about other industries, main industries like the auto industry are part of the discussions. The Midwest matters. And it matters, by the way, more than at election time.
All right, Andrew?
Let me ask either of you this question, which is, I think we all want to save the employees and help these industries, no question. The question, of course, is how to do it, which is to say, when we rescued the automobile makers in 2008 and 9, the United States taxpayer took a piece of the company, received equity effectively in the company, and participated to some degree in the upside of that because we were protecting those specific industries. We've now done something similar, though, at a lesser level with the airlines. How would you think it should be approached?
So I want to be really clear. This is not 2008. The companies are not in the same position. You have to divide this into three categories. First, right now, is just the reopening. How do you keep the workers safe? They need PPE. There have been very stringent protocols implemented at the plants. And for everybody across the ecosystem, how do you keep people safe? Two, as you start back up, the suppliers need liquidity. They're in a 45-day payment process. There are many suppliers that simply do not have the money to pay for raw materials. Some of them are facing bankruptcy. So you've got to make sure that the liquidity is there. They don't want anybody to give them a grant. All they want is an ability to access a loan until they can pay it back. And then as we slowly get back to work, people, there isn't going to be demand for vehicles. There was a good month last month, surprisingly, but then how do you drive demand later in the year?
My other question to both of you that relates to this is, GM, for example, had, I should say, in past tense, a dividend program and a buyback program. We were talking to a couple of different guests this morning who said that one of the great challenges of this pandemic for all companies is just, and I think the lesson is just how much of or how little of a rainy day fund any company in America has been operating with throughout all this. How would you think about that then in the future if we were to provide some help?
Well, you got to remember when we did this back in 2008, the auto companies did pay the money back. And as you look at this situation now, and Debbie pointed it out, the suppliers are paid 45 days after they actually provide the supply for the parts. So as a consequence, because they've already been closed since mid-March, as the autos start up again, and they're looking at doing production perhaps 25% for this next week, that means the suppliers aren't going to be paid until July, yet in fact, they're back into business this week, producing those parts that have to go down the assembly line next week. I don't think they can wait till July, whether it's paying their for their raw materials or their employees. And, when you have an automobile that uses about 2,500 parts, it doesn't work unless they're all there. So This is a critical industry for America, and one of the reasons why we've asked our leadership, Republican and Democrat, to really take a look at this, knowing that it has a tremendous impact on manufacturing across the country, not only here in the Midwest.
I don't think anyone disagrees with you. I think the only question is, what's the fairest way to do it? To implement it, to get the money to these companies and to protect the taxpayer at the same time.
So one of the ideas that Debbie and I are tossing around, and we're getting close to coming to a conclusion on this, starting some discussions, is not like what we did before. There's no cash for clunkers program like there was back in 2008, where people trade in automobiles and get something new. The fleet sales, Hertz was talking about going the bankruptcy route this last week. You've got your communities that are buying police cars. They're probably not going to be doing that in the near term with the shortfalls in state and local budgets. So one of the things that Debbie and I are talking about drafting is something that's actually consumer, not a bailout, not a handout, not a plan directly to the auto companies, but instead incentives for consumers, whether they be on the business side or the individual side, to get that demand up where it ought to be, to then bring back the volume of cars in production and obviously the manufacturing back into America.
Okay. Representatives, we appreciate both of you joining us this morning, and we look forward to watching this and seeing how it progresses. And, of course, we wish everybody in the state of Michigan and everybody in the auto industry all the good luck that they can get. When we come back, a lot more on Squawk Box. We're going to talk to the CEO of food giant General Mills about the safety and durability of the nation's food supply as we move away from stockpiling that characterized the early days of the coronavirus in this country. What comes next? And then a little later, a very special interview with the always outspoken CEO of Social Capital, Chamath Palihapitiya. You don't want to miss it. Meantime, here's a surging stock mover for you as we head to a break. Biotech company Novavax, the company announced it is receiving nearly $400 million from the nonprofit Coalition of Epidemic Preparedness for trials of its experimental coronavirus vaccine. Jim Cramer is going to be speaking with the CEO and the CEO of Logitech. That's going to happen tonight on Mad Money. Stay tuned. You're watching Squawk Box right here on CNBC.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
He scores!
With game replay on TuneIn, you can listen to every power play, slap their price today.
Welcome back to Squawk Box this morning. Take a look at futures right now. We are in the green. The Dow looking like it would open up about 119 points higher right about now. S&P 500 up about 11 points, and the NASDAQ looking to open about 26 points higher. Becky, over to you.
All right, thanks, Andrew. Businesses across the spectrum are hurting from government-mandated shutdowns, but we are joined right now by the CEO of a food giant that has just raised its guidance. General Mills says that its manufacturing plants have been producing at above normal capacity since mid-March. This comes as consumer demand for staples skyrockets, with more people eating at home. Joining us right now is Jeff Harmening. He is the chairman and CEO of General Mills. And Jeff, thanks for being with us today.
Yeah, thanks for having me on the show this morning.
So I know this has been the case. Sorry? Jeff, I didn't hear you. Can you say that again?
Yeah, thanks for having me on the show this morning.
Great. Hey, Jeff, I know this has been the case in our household. We've been eating a lot more cereal, Cheerios every day. We eat yogurt, we eat granola bars. We've been making cake from mixes and things. I guess I just wonder, in terms of how consumers are eating now, do you think that lasts? Do you think these are situations and consumer behavior that lasts when things change, when the pandemic's over?
Well, you do see people eating a lot more at home, particularly cereal, but also doing a lot of baking. And I think it's hard to say how long the current trends will last, but certainly consumers will continue to work from home, and we believe continue to eat from home. So while it's tough to say how long these trends will last, we do believe that many of them will.
How have you been handling this increased demand that's come through? I know that you guys have been trying your best to keep up with the demand for everything that's out there. How do you do that? Have you hired more people, run more shifts?
Well, I give a lot of credit to our people on the front lines, which are people at our manufacturing plants. More than 95% of people at our manufacturing plants are coming to work every day, and our outputs have never been getting better. Interestingly, safety at our plants has never been better as well. General Mills has taken a lot of precautions to keep our employees safe, and so far we've done a good job of keeping up with demand.
What has that entailed? Do you have more workers that you've been hiring?
We have hired a few more workers, but importantly, we've kept the workers we have on the front lines. We've kept them safe. We have offered leave for people who are sick or taking care of people who are sick. We've offered bonuses for people to stay, and most importantly, our workers now know now that the jobs they're doing are making food America needs, and so people are taking a lot of pride in the food they're making every day.
There have been so many questions about the supply chain in every aspect, everything from toilet paper to beef and how those things get through. Have you run into any problems with your supply chain, with being able to get things manufactured, delivered to the grocery stores on the shelves?
Our supply chain is working very well. Our demand for our products in the U.S. was up more than 40% in April and more than 30% in March. But for the most part, we've been able to keep up with demand. All of our plants are up and running. We have cut down on some of the variety of items that we're selling. So instead of making 90 different varieties of soup right now, we may be making 50 or 60. So we have cut down a number of items to make sure we can get things through our plants faster. But I've been really pleased with the way we've been able to service our customers and eventually our consumers.
Hey, Jeff, you're a global company, and obviously we are kind of looking to China and to Europe to see how they're coming out of this, to try and anticipate how things might go here in the American economy. And there's a question from a Morningstar analyst, Rebecca Schuneman, who says she's just wondering if you can give an update on what's been happening with the Haagen-Dazs stores that you have in China. I know on the conference call you said that traffic was down 60%, I think, year over year. Where do things stand right now?
Well, thank you. We have two businesses in China. One is an at-home business, which is Wanchai frozen dumplings, and the other is a Haagen-Dazs shops business. For our Haagen-Dazs shops business, we saw about 90% of our shops closed in February. Now all of our shops have reopened. We saw traffic down about 90% in February. Now traffic is up over 50%. And so is down 50% from where it was at its high. And so what we see is the economy coming back, but coming back gradually. We also see that our Wanchai Ferry frozen dumpling business continues very, very high demand as consumers in China eat more at home, just as they are here in the U.S.
Mm-hmm. Jeff, want to thank you for your time today. Really appreciate it. It's good to see you.
Thank you. Good to see you as well.
Okay.
Thanks, Beck. Thank you. We've got some breaking economic data still to come this morning. An important read on inflation for the month of April. And right out of that, we're going to speak with Social Capital's Chamath Palihapitiya on what he sees ahead for the U.S. economy coming off the worst ever jobs report in U.S. history. As we head to break, take a look at both PNC Financial and BlackRock. PNC is selling its 22% stake in the asset management giant. The CEO said it was the right time to unlock the value of its investment. Stay tuned. You're watching Squawk Box on CNBC.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities. Search sports and scroll down to the world of wrestling to listen.
Hey, it's Jacoby here from Jalen and Jacoby. And after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series, Chasing Air, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air. And they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today. Not sure what to listen to next? Well, here's this week's top 3 things to listen on TuneIn. Oh, it's back. One of the biggest podcasts of all time. Join Ira Glass every week for news stories and experiences exploring this American life. We've got the 2020 NFL schedule. Search NFL to get the latest news and what your team is doing. Looking for some good music? How about Mi Casa Es Tu Casa? Latin music live streaming happening every Friday on TuneIn. Find these and more trending audio on the homepage of the TuneIn app.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and
Welcome back to Squawk Box this morning. Take a look at the futures right now. We are in the green. The Dow up about 105 points. If we opened up right about now, we've got a little over an hour before the market opens. S&P 500 would open up about 10 points higher, and the NASDAQ looking to open about 20 points higher. Joe.
Andrew, the shares of Toyota are falling in Japan overnight. Company reported positive numbers for its fiscal year that just ended, but it is forecasting a 20% drop in revenue for this year because of the pandemic. Also warned that profit could drop by 80%. Toyota expects the car market to bottom in this quarter, but says it may take until the first half of next year to fully recover. And sticking with the auto group in California, Tesla CEO Elon Musk is telling his Twitter followers that he's willing to be arrested after ordering his Fremont plant to resume operations, despite local orders to remain shut down. In a tweet late yesterday, Musk said, in his words, Tesla is restarting production today against Alameda County rules. I will be on the line with everyone else. If anyone is arrested, I will ask that it only be me. And shares of the electric car maker have rebounded almost to pre-pandemic levels, well above $800 a share. Andrew.
Okay, when we come back, a lot more on Squawk Box, a breaking read on inflation from the Labor Department. We'll bring you that number. And, of course, market reaction. And then Chamath Palihapitiya is going to join us, never one to hold his tongue. He's got a lot to say on all of it when Squawk Box returns.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your...
Lose up to 13 pounds and 7 inches overall in your first month. Money back guaranteed. Order now and we'll deliver Nutrisystem for Men.
Not only did I lose 60 pounds, I don't snore.
Save 50% on a month of meals delivered to your door.
Go online or call 888-916-FIT6 to save 50% plus get probiotic shakes free.
Updates on reopening.
Some retailers and manufacturers going back to work.
New screening measures, the latest medical advances, and news from Washington. Markets in turmoil tonight, 7 Eastern. Watch or listen live on the CNBC app.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
Okay, here we go. With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
And news out from Moderna, the biotech company. The company winning fast-track designation from the FDA for its COVID-19 vaccine candidate. As you know, and you've seen Moderna on here, along with the CEO, who is actually going to be one of the guests at our Healthy Returns conference today. Moderna is in the process of preparing phase 2 and phase 3 trials for the vaccine. The designation means that the vaccine will get an expedited review from the FDA when it is finally submitted, if it is, for marketing approval. Andrew.
Meantime, Joe, Dr. Anthony Fauci expected to deliver a very dire warning today when he testifies before the Senate Health Committee. That's going to happen this morning. In an email to the New York Times, he said that his main message will be of the danger involved in reopening the country too early. The White House plan involves 3 phases with criteria, as you know, for each one, such as a downward trajectory in positive cases and robust contact tracing. Fauci told the Times, quote, if we skip over the checkpoints in the guidelines just to open America again, then we risk the danger of multiple outbreaks throughout the country. This will not only result in needless suffering and death, but would actually set us back on our quest to return to normal. Dr. Fauci's message also underscoring one of the main concerns for businesses as states try to reopen. Potential liability is one of those. And this afternoon, the Senate Judiciary Committee is going to hold a hearing on expanding protections for businesses so that when they do open, if in fact there are outbreaks, those companies may be protected. And that's going to be a debate as well in this country. Joe.
We are just a few minutes away now from the latest consumer inflation data. The futures are up just under 100 points on the Dow. That would be 3 straight up days for the industrials. And you can see the Nasdaq's been strong. It's actually up for the year. It was up sharply yesterday, up again today. The 10-year note, we will take a quick look. We should probably look at oil, too, which is up almost 5%, over $25 a share on some Saudi production cutbacks. There's a 10-year note, 0.7%. Rick Santelli standing by at the CME in Chicago. We've got some time before the numbers come out. Rick, you own any corporate bond ETFs?
No, but if I did, I'm sure I'd be in a much better mood. And, the only thing I'm thinking of is, I never really thought I wanted to buy a Tesla, but lately I really seem to have this affinity for potentially having one in my driveway. How about you?
Me too. And I've heard from some other people that are, I don't know what you'd call it. Let's just say that they feel some affinity for Elon Musk's position on this. But I can tell you, Rick, the same old political lines are delineated by this. How does that work? Is it a left brain, right brain? I really want to know. I really want to know how that works. Can you figure it out?
Yeah.
I don't think you can. You're not going to comment. I just don't know how it works, because the same old political lines are drawn on all these issues, and people just end up. I mean, maybe that's the tribalism that President Obama was talking about the other day when he mentioned that. Can you hear me, Ray? I don't think you can.
I've got you, Joe. Anyway, so you and I guess, could keep talking. But you know what? It's going to be fascinating to see how it all works out. There's a lot of different rules around different parts of the country, and I understand that this is definitely complicated, and I understand that people are nervous, and the people that are nervous shouldn't be forced to do anything they don't feel comfortable with. But yet there's a lot of people that seem to be a little more comfortable venturing out. Different parts of the country are different. But we are about to see consumer price index. And the reason this is important, of course, is there's a lot of things people know they're paying more for, whether it's cleaning supplies, certain food groups, but yet they are swamped by things like oil, cars, airlines, a lot of the services. So we're going to be looking for various parts of this number. And here it comes, down 0.8. It's amazing. Exactly as expected by most analysts, down 0.8. And the headline number, the lowest it's ever been since 1947 when it made its debut, was -0.6 in January of 2015. So this by far wins that award, of course. And if we I'm sorry. The last time it was January of 2015, -0.6. The all-time low actually is November of 2008 at -1.8. So we're not quite there yet. Now, if we strip out the all-important food and energy, that is the one that has never been seen before, down 0.4. Core, which it goes back to 1982 at -0.2 and 1963 at -0.3. Obviously, this wins. So it's the core that's all time, never been down here at levels before. And if we look at year over year, 0.3, and core year over year 1.4. And this is also interesting. And I know friend of CNBC Peter Bookfar is out there somewhere listening. If you look at the year over year core, we've had 25 months in a row, Joe. It was either 2% or higher. That streak ends officially this month. And how did the markets react? Well, 141 and a 10 before, during, and after, 17 and a 2-year before, during, and after. This was picked and carefully handicapped because we all know some of the effects of shutting down the economy, but it doesn't dispel the notion that there's a lot of questions about prices, Joe. In the here and now, many believe it's going to be deflationary pressures as far as the eye can see, but there may be a point down the road where that may be reversing, and of course, we know it all depends on the demand equation. Back to you.
That's all right, Rick. You got in a higher close to the end there, a higher, which I was waiting for. Thank you. All right, Becky, are you back among the hearing now with the audio?
Sort of. I mean, this is the risks working at home. I don't have a spare IFB, so I just took it off and I'm blaring it down the line. I'll do my best to stick around.
No,
but I
can
hear
an echo,
kind of,
which
sort
is
of.
Interesting.
Yeah, that's probably because it's blaring down the line and playing back into my... all right, I'll try and stay out of this. Anyway, Steve Leisman joins us. He's got more on these numbers, too, and what he thinks about it. Steve, what do you think?
Well, I think there's a great contest going on here between the forces of inflation and deflation. I think what Rick said was interesting there, just at the tag end of what he was talking about, that what may happen down the road. When I separate things out, I have... historic decline in demand, historic rise in joblessness. At the same time, we have historic spending by the federal government, unprecedented supply shocks that's not really showing up very much, except for one category The food at home category up 2.6%. I haven't looked at the details of things like beef and pork. I know Joe would be interested in the bacon prices. But that's a place where you're going to have some price pressure on the way up. On the other side, you have the joblessness and the extreme decline in demand. So let's look at some of these prices here that are monthly changes, but they're like decade changes here. Energy commodities down 20% with a 20% decline in gasoline. Fuel oil down 15%. If I look at apparel prices, they're down 4.7%. Medical care also down. Transportation services, that's going to pick up the airline data. Overall, what you're going to have here is you're going to have the forces of deflation will win for a while. And then we'll have to see if either Fed policy, government spending, and a rebound in demand together with the supply shock end up somewhere down the road in the next several months, creating some inflationary pressures the other way, Becky.
Okay, Steve, thank you. Andrew, I'll send it over to you.
Hey, thanks. Meantime, I want to bring in our very special guest to talk more about the economy, job losses, reopening the U.S. businesses, and so much more. Chamath Palihapitiya is the founder and CEO of Social Capital. He's also the chairman of Virgin Galactic. Chamath, it's great to see you this morning. I think where I want to start is the big news of today and what's become a debate, the Fed planning to buy up ETFs backed by bonds and what that means and what do you think it says about our economy and what kind of debate you think there's going to be in this country about the steps the government's taking?
Well, I think that if there was any doubt before, there should be no doubt now that we have completely divorced the economy from the stock and the bond markets. And, you know, the Fed has been the principal agent of that obfuscation. And so, you know, what these guys are doing now is with the ballooning balance sheet and all of this money going in to prop up companies, what you're going to start is a really bad, or you're going to accelerate a really bad deflationary super cycle here. So, you know, if you think about this, Andrew, like the best technology companies in the world have literally been training billions of consumers to not really spend money, right? The whole idea is if you wait, tomorrow you'll get more for less, whether that's YouTube or Facebook or Google or Amazon. The point is that these guys have really conditioned people that, you know, you on balance want to actually not be spending that much money because we'll just be giving you more and more value. And when you on top of that then add to the fact that the Fed comes and pumps in all of this money that has to go someplace, consumers respond by picking these companies that give them more for less. That's where all the profits get trapped. As a result, a handful of companies really disproportionately perform and inflate the equity markets. The companies that actually traffic in traditional business models that don't necessarily have tech at their disposal get decimated. And so that cycle is just going to get exacerbated and exacerbated. So in the real world, things will continue to get cheaper for the future.
Chamath, though, here's the question. And I'm not advocating the Fed doesn't do these things because I don't think that there's many other options. The problem is that it's a blunt instrument to a large degree. And while you'd love to make the stimulus, if you will, more effective or get it to the right people, we don't have a system of government that necessarily is at least can or is willing to do that.
Well, we have to figure out how to break this cycle of deflation. And when we're a debtor, when you are a debtor, the best thing for you is some form of inflation or at least to minimize the effects of deflation. And the reality is that we do have a system and you don't have to pick who the quote unquote right people are. The right people is every citizen of the United States. And I've said this before, but this is a point in time where direct fiscal stimulus should be going to the hands of U.S. taxpayers. It is the most effective way to blunt this unnecessarily rampant asset inflation in the markets and at least balance it with incentives in the hands of consumers to buy things. And if you don't break this cycle and teach a new pattern of behavior, we're going to be looking at a Japanese-style deflationary period where we'll have 10 years of unemployment, the economy will just be stagnant, and we'll wonder why equity markets keep going to all-time highs when it doesn't actually map to what you see in the real world on a day-to-day basis.
I want to touch on so many different issues with you. One of the other hot topics of the morning is what's going on with a company that I know you like a lot, which is Tesla and Elon Musk. Is Elon Musk doing the right thing by opening in the face of rules in Alameda that would effectively tell him that he can't?
Yeah, I think this case is so interesting because it actually paints what you guys spoke about before. I had been and will continue to be a huge supporter of his. What you have right now is this issue where the federal government has a specific set of guidelines. People may think that they fall into those guidelines. Then states then issue guidelines. And then on top of that, you have regulations at local levels. When you put them all together, it's incredibly confusing. So if you're a business owner and you're trying to figure out how to get back to work because you believe the risks are manageable, there's no clear way that you can go and actually get the approvals to do so. Because if the federal government says yes and the state government says yes, but then a local government says no, what are you to do? And then what are you supposed to do for your workers? So this is an issue where if you take a step back, what it says is there's still so much we don't understand about the virus. All this regulation is actually quite confusing. These local, state, and federal agencies have a responsibility to Americans to figure this out and be coherent. And otherwise, you'll have all of this disparity where on one side, people think we should be closed until there's a vaccine. On the other side, thousands of workers are clamoring to get back to work because of their livelihood, and there's no coherent policy response. That's unfortunately where we are, and I empathize with his position.
Chamath, that's the policy issue. My question to you is, do you support Elon Musk saying local laws be damned in this case? I'm moving ahead.
I don't think he's saying local laws be damned. I think he was trying to actually get time with the folks in Alameda. And frankly, what I saw on Twitter was, basically literally somebody telling him to F off. It was not the kind of discourse you'd expect from public officials who are responsible for engaging with local business owners. So I think what I'm saying explicitly is Alameda should sit down with Tesla, have them walk through their entire testing mechanism, the protocols they're taking, and actually make a decision and not fight him over Twitter.
Hey, Chamath, I wanted to go back just to the point on the Fed. Yeah, thanks, Andrew. Just to the point on the Fed. Look, I realize that it's ugly and that it's not the perfect way of doing things, but I think if the Fed hadn't done what it did 2 months ago to kind of step in and stabilize the markets, we'd be in a much worse position today, because by stabilizing, let's say, the credit markets, companies that are good, strong, conservative companies were able to go to the market and borrow money and make sure that they're going to have enough money to get through the tough times to come. And as a result, they'll be able to keep their employees on. You think back to the financial crisis that we faced in 2008 and 2009, where there were serious questions about a company like GE being able to make payroll. If you saw big companies not get access to credit and not get access to money that they needed from private investors, I think we'd be in a much worse position. I can understand your point about thinking there are a lot of people who still need help along the way, but I just feel like things would be much worse if the Fed hadn't taken those actions.
Well, I take your point, and here's what I would say. I would say that 90% of the gains actually happened when the Fed just signaled that they were going to do something. You're absolutely right. It calmed the markets down enough where the best companies could go and actually get the capital that they needed. But then if you actually separate it and look at it now, the Fed's primary and secondary facilities aren't necessarily going to affect or help the best companies, because in order to sort of qualify for these programs, you need to go through a whole bunch of hoops. You need to sign up for supervision on executive compensation. You are going to self-select, at least in their primary facility, for probably the worst performing companies. And when you go and buy ETFs, you're buying baskets of things that also contain a bunch of these zombie companies. The best companies can and will continue to self-finance in the markets by themselves. And yeah, you're right, the Fed did calm the waters. But by now actually stepping in and spending more and injecting more capital, what you're going to see is the equity markets rip higher. You're going to see the credit markets continue to basically go towards negative rates. And none of that stuff does anything to actually fix the economy. And so asset inflation, we learned this from 2008 to now. Asset inflation does not solve income disparity. It actually doesn't solve full employment. It doesn't do any of the things we needed to do for it to be a robust economy. What it does is allow people who play in the financial markets to make money. those don't trickle down to normal people. And until we actually admit that to ourselves, and until we realize that this dogmatic idea that inflation is bad, that's a dated idea, we're not going to move forward. And so I appreciate the fact that the Fed did something. I think it was critical. I think it was great that they said it. But now actually acting and pumping in all of this money on top of the money that's already gone in is creating a deflationary supercycle in the United States that is not helpful. Consumers are not going to spend. They are going to save. They're going to wait.
Chamath, I want to throw one other big topic at you, and then we're going to take a pause because we're going to extend this interview out just a little bit. But buybacks, you have been a critic of buybacks recently, and yet Warren Buffett made an interesting comment at his annual meeting just about a week ago to Becky, I believe, where he effectively said there's nothing immoral about buybacks. Sometimes buybacks are stupid. Sometimes CEOs make really bad decisions about pursuing buybacks, but there's nothing immoral about it. Do you agree or disagree with Warren?
Yeah, it is a fundamentally idiotic business practice, and I agree with that. It is for the CEO who is unimaginative and has no idea what to do and is largely held hostage by hedge funds or their board. A third of S&P companies spend on R&D, only 1/3. So that means 66 out of 100 companies don't even bother to think about tomorrow. They just take all the money they have and they just send it right out the door. And that kind of behavior is fundamentally dumb, because when you go through a pandemic like this, what you realize is that you should have been building for some resiliency so that you would have savings, so that you can actually keep your employees through a drought, so that you can actually have business models that keep you in business, that can still generate revenue. But because you didn't do it, you're now all of a sudden standing at the till asking for a handout from the U.S. taxpayer, whereas the U.S. taxpayer themselves can't get any help. So that dynamic needs to get fixed. And the simple way to do it is to actually have a checklist. So to basically say, before you are allowed to do a buyback, there are certain things that you should be doing. You should be spending on R&D. You shouldn't be compensating your CEO 600 times, the lowest employee in your company. There are all kinds of simple checks and balances. After 2008, we asked the banks to do this. And we said, let's clean up and give health checks to these banks before we allow them to lever up and sort of, push us into an abyss the way that they did in 2008. Coming out of 2020, I think what we should realize is we have a very brittle economy, a very fragile ecosystem of companies that are over-levered. We need to create incentives for these folks to save and to invest in the future. And the best way to do it is to not allow them to take the short-term, easy way out. When you look at Amazon, what's interesting about Amazon is people used to lambaste Jeff Bezos for not being profitable. But when you looked under the hood, he was the single best investor of our generation, even better than Buffett, because he would take billions of dollars of free cash flow and invest it in the future. There is a business case to be made in every company to either save and or spend to plan for the future. And instead to just give it back randomly in the open market is one of the dumbest business decisions you can make. So Warren is right, and I agree with him.
Okay, we're going to continue this conversation with Chamath. Stay where you are. We're going to press pause. We'll come right back in just a moment.
All right. We'll tell you what Warren actually said, because you don't agree with him, Chamath, but we'll tell you that when we come back. We're going to check in with Jim Cramer, too, as we make our way towards the opening bell. On a programming note, CNBC is gathering healthcare leaders at the center of the fight against the coronavirus for an interactive virtual event today. You can learn more and request an invitation at cnbcevents.com/healthyreturns, and you can catch complete coverage of the event all day on CNBC. Stay tuned. Squawk Box will be right back.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
While While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
Not sure what to listen to next? Well, here's this week's top 3 things to listen on TuneIn. Oh, it's back. One of the biggest podcasts of all time. Join Ira Glass every week for news stories and experiences exploring this American life. We've got the 2020 NFL schedule. Search NFL to get the latest news and what your team is doing. Looking for some good music? How about Mi Casa Es Tu Casa? Latin music live streaming happening every Friday on TuneIn. Find these and more trending audio on the homepage of the TuneIn app. To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know.
Let's get to CNBC headquarters. Jim Cramer joins us now. Santelli wants to buy a Tesla now. You had sort of you turned around and wanted to buy a Tesla, or you liked the company after you drove a Tesla.
Yes.
What do you think of what Elon Musk?
I like driving in it. My wife liked it. My daughter liked it. A friend of mine who is a former very big CFO said they could raise $2 billion in a heartbeat. Stock was at 270. Came in. I just said, you know what? That's it. I can't fight the tide. I think it's too good. My wife is a huge car person, just gigantic. And she said, this is it, Jim. I mean, if there was ever a stock you should recommend. And I finally decided, that's it. That's right. And I looked at the financials and I realized that they don't have to advertise. People love it. And I think that Elon is a genius. And I know that when you say that, people say, look, he's willing to put his workers in harm's way. I think that if you go in and inspect his plants and if they're doing things that are in harm's way, change them. But I think this man's a genius. I think he makes great cars, and I think he should be able to do this car. And Secretary Mnuchin said the same thing yesterday. I hope it works out, but this guy's the best we have in terms of manufacturing. And I really am tired of hearing people on my Twitter feed say, don't you know what'll happen once he opens? He'll hurt people. Is there anything that makes me feel that'll hurt people? I think what'll do is help bring back American manufacturing. He's the best we have.
All right, Jim. Hope that we will be watching at 9 for more on this and many other things. Buying, Fed buying some ETFs. Why not? Anyway, thanks, Jim. We'll see you in a couple of minutes. Coming up more with Social Capital CEO Chamath Palihapitiya. Stay tuned. You're watching Squawk Box on CNBC.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn.
We're here to help with all-day coverage on air and on CNBC.com/smallbusiness.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Not sure what to listen to next? Well, here's this week's top 3 things to listen on TuneIn. Oh, it's back. One of the biggest podcasts of all time. Join Ira Glass every week for news stories and experiences exploring this American life. We've got the 2020 NFL schedule.
All right, back with us, Chamath Palihapitiya, CEO of Social Capital and Virgin Galactic Chairman. Chamath, great to see you. This is a direct quote from Buffett, because I don't know. This is a direct quote. The criticism towards buybacks is largely uncalled for. It's very politically correct to be against buybacks now. When the conditions are right, it's obvious to repurchase shares and shouldn't be the slightest taint to it any more than there is to dividends. That's what he actually said. And you do not agree with that, I don't think, and that's fine. And I understand exactly where you're coming from, although I do think, as a guy who loves risk capital, if a company is like some staid company that has too much cash, and I don't think Apple was staid necessarily, but if they give it back to shareholders who then go out and redeploy it into technology companies or somewhere else, I don't think it's necessarily should be viewed in a negative light. But you know what I really want to talk to you about? But you can talk about this, but I want to talk to you about whether we ever go watch the Warriors play again. And do you wish you had sold the Warriors before all this happened, or no, you're in it to win it, and we'll get through this? I mean, I'm sure that's the answer I want to hear, but we're going to get through this, right? And play some more hoops someday.
Let me say 2 things. But first, on the first one, I think, again, the key part of Warren's sentence is under the right conditions. And all I'm saying, Joe, is
I agree.
You don't send the money out the door before you take care of yourself and invest for your own future. That's all I'm saying.
I got it.
When that's possible, you should do it. And most of these CEOs have not. And I think that's ridiculous when they then go and ask for money.
Chamath, they got a level. It's bad, but from the last time we did this, we didn't want cash compensation. We want them to have a stake in the company, so they try to shrink the float to raise the EPS to get the stock price up to where some of their compensation kicks in, and I understand that. It's the unintended consequences of what we did last time. But I do understand. How about? Am I going to be able to sit on the floor and it's going to be just me and you if I come out there?
I think this is a really important question we need to figure out. The reality is, in my opinion, there are certain experiences, going out to eat, going to concerts, going into large areas where you have basically anonymous interactions, essentially. So stadiums, casinos. I think, frankly, cruise ships. These are all the last things that can come online, because you're taking a level of risk where you have to underwrite your own comfort. And that's not something that we've ever had to do before. It's not as if when you got on an airplane, there was a 50-50 chance that something could happen. The reality is these were, 99.99999% safe. And so flying across the country was just a thing you did. But if going to see a concert all of a sudden was 50-50 or 60-40 or 70-30, for some people those risks will be okay, probably the younger you are. And the older you are, those risks shouldn't be okay, frankly. So I think that these are things that are going to be the longest things to figure out. And you're going to see some unfortunate byproducts of this. You may see college football stadiums empty for the next 2 years. Or you may see people separated, by 10 or 12 seats, what kind of an experience is that? I don't know. So I don't know the answer. I don't know what the NBA is planning to do specifically. But if you're asking me just as a person that manages risk, I wouldn't be super comfortable taking a huge risk going into, a casino floor or, going to a concert for the foreseeable future.
It is true, and it's not enough time with you. We had Paul Tudor Jones on yesterday, and he was talking about, QE infinity, however you want to look at it, and that maybe the time will come when you need to have some type of asset that there's a fixed amount of, and he was referring to Bitcoin. I think maybe even Paul Tudor Jones.
Say the words. Say the
Bitcoin.
words.
I have to disclose that I own. I mean, compared to you, I own like 3 cents out of $1 or something. You know what I mean? So, but I have to disclose that I own it. But Paul Tudor Jones made the case yesterday, and yesterday was the halvening. The halvening was yesterday. So the stock to flow has now gone up.
So, Joe, this is again now you're seeing a lot of lines of different thinking converge. So when we started to believe in the long-term value of Bitcoin, it was as a store of value, and it was that schmuck insurance that you kept under the mattress. And there was a small cohort of us that have believed this for like almost the last 10 years now. But when you have people like Paul Tudor Jones, sophisticated market participants who don't necessarily come to it from that perspective because he was probably first in gold or curve steepeners or whatever, now all of a sudden even he is looking at Bitcoin, and the reason is because we are in this massive deflationary spiral, and you have to figure out how to protect yourself. And so however you think about it, from a classic economic theory or the schmuck insurance where you're somewhat skeptical of the established governing masses, it is important that we have a hedge, a non-correlated hedge. And I still struggle to find anything that is as uncorrelated to anything else and to everything else than Bitcoin. And I think that, if we see it have its day, it's a moment where you're going to wish that you had just bought the 1% and just kept it.
Yeah, one man's 1% is another man's. Anyway, it's been great having you on, Chamath, and we all. I don't know. I'm ready for Russian table tennis. I got some. There's one guy I got to tell you about. He's so good. You got to bet on him. No, but that's all. That's all we have. It's horrible. I can't wait for sports to come back. I just want to do it safely, and I know you probably feel the same way. Sorkin, thanks, Chamath. See ya. Sorkin and Becky, we're going to get your. I don't know what happened with your. It's hard though, isn't it? When the audio goes out, See, I don't even need audio a lot of times. It doesn't matter what other people say. I'm going to say what I'm going to say anyway, whether I hear what they're saying or not. Anyway, make sure you join us tomorrow. Squawk on the Street is next.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber coming to you live from various locations. Futures are green as the Nasdaq's riding a 6-day win streak, the longest of the year. Big news day. Fauci's in front of the Senate in about an hour. The Fed begins buying corporate bond ETFs. 5 Fed speakers today. WTI up 5% as net long positions are now at the highest since April of last year, Jim. And of course, core CPI, biggest month-on-month drop in the history of the series, although there's some debate about just how important that is right now.
Well, I got to tell you, the bullishness is manifested by a huge part of the market. I call it the $11.5 trillion portion of the market, which is related to the Cramer COVID index, excuse the hubris. You can't get enough of these stocks, and we find them everywhere. These are the companies that do best when you stay at home, whether it be General Mills with a surprise pre-announcement that was extraordinary yesterday, or whether it be a lot of the Apple number bumps today, or even just, kind of, out of the woodwork, AbbVie put on the recommended list. Why? Because now you can stay at home but go get your Botox. There is just absolutely a level of bullishness about this stay-at-home, work-at-home market, and then there's the rest of the market, which is just awful and astonishing.
We're going to get to Calhoun's comments on the Today Show in a moment, but I know you have Logitech on tonight. Sales up 13, OpperNet up 23. I mean, there's a lot of webcams and mice and keyboards that are being bought right now.
Look, if you want Logitech, now they do have it's so interesting because some of it is gaming. They have a particular mouse that's almost as good as a wired mouse. Well, people want that. They don't want latency because they're playing video games at home. If you want to have a home office and get some great stuff, quality stuff off of Amazon, you can just quickly set one up yourself, and then you can Zoom. And, we look at these guests, and anyone who's a phoner, they just should go to Estee Lauder or something, or go to their dermatologist, because there's no reason not to do a Zoom Logitech interview. It'll cost you like $180. So, I mean, this is happening so fast. that I think it's just incredible. I had an outfit called Upwork yesterday. And all they do is they find people who would be working at home, and they'd be the right person for you. I see tremendous tall office buildings with nobody in it. David, you are seeing with these real estate investment trusts, with the exception of Simon Property, distress like you wouldn't believe, and it is yet to hit the banks.
Yeah, the future of work is something that we're going to be talking a lot more about. And it's funny because in talking to people on Wall Street, so to speak, the plan to get back to work, for example, goes to your very point. It's not just retail and Simon, which we'll get to, reporting numbers, and we'll get to that in a bit. But it's also all the office buildings. How many people are really going to be going back and talking to people about their plan for return in the financial services industry? Traders, for example, would probably be the first to be brought back, but they're going to bring back only a slice. And they're trying to figure things out about how many people can be in an elevator, and they're going to be monitoring every move that is made by the people who do go back. And guys, there's going to be a cohort of employees who just work from home continually. And Jim, that makes you wonder. Yes, there's going to be more social distancing. Yes, you may need more space to a certain extent, but there is going to be, I don't know what the number is, 20, 30% of the employee workforce that just doesn't come back. It may not be the same people, but they're going to be working from home. That's kind of what I continue to hear. I don't know if it's what you do as well.
Oh, yeah. I mean, look, American Electric Power Zone last night, where they saw a dramatic decline in industrial use. Now, a lot of that is skyscrapers, office buildings, but a huge increase in residential. Now, a lot of that is the office at home. Now, this is one of the largest transmission companies in the country, and it is just happening so fast that it's even impacting electricity. Carl, I've got to tell you, if the choice between going and get yourself some COVID by going to the office and pressing the wrong button with too many people in the elevator and side to side and shoulder to shoulder with traders, or sitting at home, having a nice breakfast and then going to work, if you can silence the dog, no crying babies, you're in business.
Yeah, Jim. I mean, guys, some of the scenarios being laid out, especially in the UK, there's a story out this morning on Reuters about London. I mean, scenarios where bankers and traders don't go back to work for at least a year. And then, of course, there's corporate travel. David Calhoun of Boeing on the Today Show this morning talking about something that the sell side's been laying out there for about a month, and that is whether or not demand comes back in 3 to 5 years. And, of course, whether a major carrier ends up going out of business. Take a listen.
Do you think there might be a major U.S. carrier that just has to go out of business?
Yes, most likely. Something will happen when September comes around. Traffic levels will not be back to 100%. They won't even be back to 25. Maybe by the end of the year, we approach 50. So there will definitely be adjustments that have to be made on the part of the airlines.
Jim, Ben Baldanza on Squawk this morning said he thought a 50 number by year end was actually pretty optimistic.
Well, he's a bit of an iconoclast, so to speak. Look, I think that Secretary Mnuchin doesn't want that. I think the airline business is a very important business for our country. I do feel that when I look at a United Air flight yesterday and it's packed, I question exactly how poorly these do. I'm always surprised. Now, here's Mr. Calhoun. He gave a very critical New York Times interview of his company. One of the things that I've learned in life, having been a salesperson and taught sales, you just don't tell the clients that they don't have enough money to do business with you. So what I'm going to call that, I'm putting that one in the ill-advised category. Just because he's the CEO of a major company, you can't say he was ill-advised. Stunning? David, stunning?
Maybe. Listen, the airlines.
Hey, David, one of the three of you guys are going to be out of business a year in. I don't know which one. Hey, could be any. No, come on. You're trying. These are customers buying billions of dollars of equipment. The one thing you don't do is say, "What I'm going under," because that's just not what you do in America.
I suppose. Calhoun is a pretty straight shooter, I think, as we've learned, right? And seems to speak his mind, perhaps, to your
that's
point.
Great.
Even when he shouldn't.
All CEOs are salespeople.
Yes, they should. Many of them are, and many of them are very good at that, and that is why they got to the jobs that they have, because they are good at selling, Jim. You're right.
Yeah.
Guys, when I think of Boeing, though, I still come back to the $25 billion that the company was able to raise in the corporate bond market. And that leads me to something else that's still extraordinary and going on every day, which is the level of capital markets activity is just off the charts.
Yes.
And it's not just debt. It's equity as well, although debt needs to be mentioned. I mean, Disney raising another $11 billion through sales of, from 5 years all the way up to 40, 3.8% notes due 2060. They raise $11 billion in total. Those were priced at a bit of a discount. You're talking about what could be $2 trillion in investment-grade debt raised this year by the time the year ends. It's just extraordinary. Companies willing to come back again when they've already hit the market once. And then, Jim, we've also got equity. We talked a lot about it, but for companies that have had to issue equity. But then you got this huge secondary from PNC for BlackRock. I mean, those numbers are enormous. The banks are living off the capital markets activity right now because obviously M&A is very quiet.
Well, they better do it because every revolver has been turned. Everyone took the revolvers, and including companies that I wouldn't give 2 cents to. But by the way, also Federal Realty, which is a really good shopping center company, they just tapped the bond market at prices that, 10-year over, 310 over. I mean, people are willing to buy a lot of stuff. Now, maybe that has to do with the fact that the Fed is buying an ETF of bonds that are allegedly high quality. I mean, a lot of stuff is happening that is pretty extraordinary. But I cannot believe when are we going to see the banks on the hook for some real bad debt? We're going to talk about Simon Properties. But David Simon, he's amazing. I mean, he made this stunning thing in his conference call. It's like, I'm going to pay my dividend in cash. One after another of an analyst congratulating him that he's paying it in cash because so many REITs have stopped paying or cut their dividends in half. And in the meantime, a lot of them drew down their revolvers, and we don't really see the reserves yet, but the reserves better be up because, boy, the stocks are bad. The bank stocks are terrible.
Simon's going to open.
The bank stocks, yesterday were bad. Yeah, they had a bad day yesterday too, Carl.
Simon's going to open half of all of its properties in the next week. I know there's more activity, David, regarding Zillow Group today and Lyft on some converts. I read this morning we've already priced more this month so far than we did in all of May of last year. It's unbelievable.
Well, yeah, I mean, right. It's not just straight equity. It's not just debt the way Disney is. It's these converts, of course. We saw yesterday that deal with Cody where KKR stepping up for what will eventually be $1 billion in a convertible preferred. Carl, it is extraordinary. And again, if you are a company, you probably want to get out ahead of the issuance that's still to come and the idea that there will be a repricing of some kind that will make your cost of capital more expensive. That at least was what Disney seemed to be thinking, Jim, by their decision to hit the market. And again, at prices
Global.
That are,
Buy S&P Global. Buy Doug Peterson's company. They rate everything. Holy cow, it's a windfall. Buy it right here. SPGI.
Guys, we'll take a break. There's so much to get to today. There actually is other news regarding Disney this morning. Bullard's on the tape talking about Fed programs. Fauci at the top of the hour. A lot more Squawk on the Street. Don't go anywhere.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
Not sure what to listen to next? Well, here's this week's top 3 things to listen on TuneIn. Oh, it's back. One of the biggest podcasts of all time. Join Ira Glass every week for news stories and experiences exploring this American life. We've got the 2020 NFL schedule. Search NFL to get the latest news and what your team is doing. Looking for some good music? How about Mi Casa Es Tu Casa? Latin music live streaming happening every Friday on TuneIn. Find these and more trending audio on the homepage of the TuneIn app.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time like a game of cards, Pictionary, charades, dominoes, or Never Have I Ever. If you've got the hardware, break out the video game console and enjoy hours of guilt-free gaming. For more indoor inspiration, search Listen From Home on TuneIn.
I'm really proud of our people and everything we've accomplished since the acquisition. The performance of the business has continued to be really strong across the board on all value drivers for the acquisition, where we are executing well. The pipeline is progressing. The approvals of new medicines in the first quarter are really a demonstration of the strong focus we have on the pipeline.
That's BMY with Jim last night on Mad Money. Jim, there's a lot of other news today with LabCorp and Moderna.
Yeah, I mean, Moderna, they love press releases. They're fabulous at that. I mean, it's an amazing company. When you fast track something from the FDA, all that means is that the illness is bad. Okay, so let's make that point. It's not like, hey, they just got some approval to do something fast. They just say, listen, this is a bad disease. Bristol Myers, Dr. Caforio is a level-headed guy. He talked about how there are a lot of alliances among drug companies to solve, get a vaccine. But what he really is, it's just this cell gene deal is so unrecognized. David, the stock sells at 10 times earnings. It says it had 8% growth. That's the kind of thing people say, well, geez, the market's overvalued. Bristol Myers. I mean, this company is unbelievably cheap. So I know that it's really chic to be able to come on and say the whole thing's a big house of cards. But how do they explain the fact that there's a 3% yielder with a decent balance sheet that sells at 10 times earnings with 8% growth, and it's going to get faster? I just find the ignorance of people who want to slam this. They should look at individual stocks. There are stocks that are overvalued, but Bristol is not one of them.
No, but in some ways, hasn't the market noticed? I mean, granted, it is, in your opinion, cheap, but it is up 33% over the last year, Jim. I mean, I guess it hasn't been getting any respect for a long time.
That's it. And that's what I said to Dr. Caforio, which is that the respect was wanting in the 40 level. David, it was just me. And I know that people just said, oh, he likes to say Bristol Myers. But then at $42, I mean, come on. He was using some gigantic number. The synergies are even better, $2.5 billion. This is the kind of stock that I implore people to put in their portfolio. And I find that there's many, many people who are so quick to say there's nothing to buy, but they don't want to look at individual stocks. They've made up their mind about the S&P, and there's probably about 2/3 of the S&P that is wrong, that just doesn't work. Where I've got $11.5 trillion with the Kramer COVID index that do work, so to speak, and make sense right here.
Yeah, but if you've bought the S&P index, Jim, you're not unhappy in the sense of you're only down 9% for the year, and you've benefited from those mega cap companies that we talk about all the time for obvious reason, Apple, Alphabet, Amazon, Microsoft, that have allowed that index to be where it is despite the performance of so many other stocks, as you point out, that are far, far less.
But you are a glass half full guy. Think what but you don't understand it's a glass full. Okay? I mean, you think you're not unhappy, glass half full. No, you should be, it's happy. I mean, look at this $1 trillion index that I've got. David, it's okay. I mean, I know it's difficult to accept because of how horrible the situation is, but companies have pivoted dramatically. Carl, two price bumps Apple today. Why? Services. David, just be less glum. You're at home. It looks fabulous. My life stinks. You have a fabulous life. You probably even have the dog there. How's the dog?
He gets put away over that side. Otherwise, he'd be all
like
here doing things you don't
over
want
there.
to. That aren't, you know, yes.
Quiet dogs, David, for the win, for sure. We'll take a break here. A lot more to get to on this Tuesday morning. Stay with us.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time like a game of cards, Pictionary, charades, dominoes, or Never Have I Ever. If you've got the hardware, break out the video game console and enjoy hours of guilt-free gaming. For more indoor inspiration, search Listen from Home on TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more. The app.
Welcome back to Squawk on the Street. Time for a mad dash from this very happy household to your miserable one, Jim, as you said earlier. Sorry about that.
It's all right.
I'll do anything I can to improve your mood.
Well, I'll do anything other than open a factory in Alameda that I'm not supposed to. All right, here we go. Dave,
all right.
This is exactly what I'm talking about, half full. All right? Notice I'm not even using half empty. Alphabet this morning, Citi bumps its price target and takes it from 1,400 to 1,600. David, why do they do it? I don't know. They cut revenue growth. They're talking about revenue deceleration. They're talking about YouTube revenue growth decelerated, and they bumped the price target. David, this is what you're talking about. This is called, it doesn't say it. It doesn't say fatuous at the top, but I would have slugged it fatuous because you don't cut your revenue growth and then raise the price target. But, David, it's Alphabet. It's like Chinatown, right?
Right.
Chinatown. It's Chinatown.
Yeah.
Right?
It's Chinatown. Yep. Jake. That said, there are some investors, Jim, who are seizing on the efficiencies that Alphabet has been finally willing to seize as they cut costs as a real positive.
Well,
so revenues
really
maybe aren't going to go up, but margins will.
Yeah. Well, the drunken sailor thing kind of got a little bit weary, I do. That's you, David.
Okay.
Dave, go out for that one, will you?
I think we're taking a break now, Jim. So we're going to do that, and then we're going to be back. We got an opening bell, by the way, 9 minutes away. A lot more for you on Squawk on the Street.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The Mina Kimes Show podcast.
Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now,
there are times when our need to connect really matters. To keep customers and employees in the know, to keep business moving. Comcast Business is prepared for times like these. Powered by the nation's largest gig speed network to help give you the speed, reliability, and security you need. Tools to manage your business from any device, anywhere, and a team of experts here for you 24/7. We've always believed in the power of working together. That's why when every connection counts, you can count on us.
Every financial plan needs a CFP professional. Confident financial plans, calming financial plans, complete financial plans. They're all possible with a CFP professional. Find yours at letsmakeaplan.org.
It started in 1898, helping clients and communities invest in hospitals and schools, roads and bridges, farmland and forests, small and large businesses, and sustainable cities around the globe. It continues today, more than 120 years later, investing to make an enduring impact on our world.
The opening bell is brought to you by Nuveen, a leader in income, alternatives, and responsible investing.
Tesla's up 2% pre-market as Elon Musk tweeted yesterday. Tesla is restarting production today against Alameda County rules. I will be on the line with everyone else. If anyone is arrested, I ask that it only be me. Plant was shut down for 5 weeks, Jim, and it sounds like you think he has maybe not legal standing, but moral standing to do what he's doing here.
Well, look, I think that he is a zealot. I think he is correct in thinking that the whole thrust of this country is to put people to work. Why do we presume that he can't do it in a fashion that's safe? I do not know. I mean, this is not Tyson, okay? This is not Smithfield. And why do we think this man necessarily is going to put people at risk? When I look at my Twitter column, there are two kinds of people. There are people who think that he's the greatest, and people who think that he's willing to sacrifice people on the altar of profit. Now, he may not be as concerned about COVID as every person in the world, but there's no indication that he's willing to sacrifice people's lives. Why can't they make a deal? I don't understand this. It's time to open up that factory, and I think he's dead right. I don't want to violate the law, but come on. This is... Do we not want this factory open? Secretary Mnuchin wants it open. I don't know. Do we have to presume
We talked about it with him. Yeah. No, we covered this with the secretary yesterday. In fact, here's what he told us.
I agree with Elon Musk. He's one of the biggest employers and manufacturers in California, and California should prioritize doing whatever they need to do to solve those health issues so that he can open quickly and safely, where they're going to find, as he's threatened, he's moving his production to a different state.
Jimmy does have the argument that they're essentially the only OEM now that is not allowed to open on a week where a lot of the other big three are going to open.
Well, it's great. I mean, we got rid of OSHA. Oh, OSHA still exists. I'm sorry. They would be valuable here. We don't have standards. There's a county unelected official that's shutting down maybe one of the most important factories in the country. I don't know. I mean, if the president were to get involved and say, look, I think that this is something we can all work out, that would be very valuable. But instead, we're focused, I don't know, maybe there'll be a tweet that says we ought to get along instead of just trashing Comcast or whatever's being cat trashed. But this to me is right on the firing line of what's wrong with America. This incredible disparity. Everybody has even a county commissioner can shut down a great company. How is this possible? How is it possible that we have just unfettered the confederacy of anything? And I use the word confederacy not disparaging in terms of the things they did wrong, but the idea that everybody seems to be equal when it comes to being able to tell someone not to do something. And you were supposed to be trying to open up America, not close America. I don't get it at all. I just don't get it. Who is this guy to stand up in front of a real company?
Jim, all that being said, there is no unified approach here. We know that, right? It is each state making their own decisions down to the local level based on all of the different factors there. I mean, you've been the first person to speak out about protecting people's health every single day and how concerned you are about it.
So trust and verify.
Do you know what the specific conditions are on the? I don't know. I mean, I'm not, and I can understand why you'd want to open the factory, but I'm surprised to hear you saying that.
Because it's not the Soviet Union in 1935. We're not like Stakhanovites. We're like putting a lot of coal into an engine. I think you can sit down with this man and work it out, is all I'm saying. Just what Secretary Mnuchin said. I think the disease is horrible, far worse than most people I think that I see commentary. But I do believe that there are ways. I mean, if we let Tyson open plants, okay? Tyson, we should let this plant open. Tyson was...
Well, there are ways to do it. Listen, again, I come back to Carrier and Dave Gitlin, who we spoke to on Friday, talking about their lines of production, having to space people out, using potentially robots in between. We know there's a great deal of robotics in any Tesla factory. In fact, probably more than there are people. I don't know what the spacing requirements are. We don't know all these things. I guess we'll find out. It would seem you should be able to figure out a way to get that thing open and make everybody happy.
That's all I'm saying, David. You and I, we have very little distance between us other than Washington, Connecticut, and right here.
Thanks for letting me.
All right, guys, opening bell here.
Come on, it's big enough. No one will look for you.
As Brett fills in, Jim, in terms of markets, a lot's been talked about in terms of this rally being led not by valuations but by flows. And I just wonder, the historical setup when the NASDAQ is up 6 days in a row, 50 basis points a day is not great.
No. Look, would I like it to cool off? Absolutely. I think that there is. Look, they forced a lot of money into the market. If we do get negative rates, that's also good for stocks. We have a lot of stocks that target boost of Alphabet really takes the cake, right? We're cutting our revenue growth, but we're raising our price target. And that's about being part of the flow. People don't want to be left behind. There are companies that are doing well. Datadog was, I know we're starting to really, that's not David's dog's name, but I do like it. Woof, David, there's a Datadog going there. Datadog was one of, other than ServiceNow, Datadog, they were one of two companies that actually put dramatic increase in forecast, okay? Most companies have suspended forecasts or they're not saying anything good. I've got two that would deserve to be up if we were playing by the old rules, Datadog and ServiceNow. And that is a little, that's just wrong. But we did go down a lot. And Apple is doing better, and I think Microsoft's doing better. I've got a lot of companies doing better. Facebook turned out to be better. Advertising didn't collapse among those. And then we've got all these other companies. Marriott, there was a cut there that was pretty significant. And anything travel and leisure is not really working. So I don't know. I mean, we just have two markets. And there's one market that is just horrendous. And the other market is getting all the money from the bad market. And it's happening now, and it's a little unnerving to see the board up again, and oil's up. I mean, come on. The retailers, really? Because they're opening up? Where do we see the monthly numbers are going to be terrible?
Well, yeah. I mean, the leaderboard is Simon Property at the top, and then Nordstrom, L Brands, Gap, and CarMax. So we're clearly playing a retail reopening dynamic this morning.
Yeah, I mean, at least CarMax, they had some good things. CarMax is that upgrade was very interesting because it talked about how people will be afraid to take public transportation, so they'll buy a used car. I thought that was good. Nordstrom is just a belief that they're not going to go under. That's not a really great reason to buy a stock. Gap is very similar. It's like, wow, you know what? I got to buy that stock because it may not go under. But there are a lot of companies that I just think are momentum. I mean, we've got Cisco reports tomorrow, and that's been momentum from 38 to 43. But maybe they've got that division that competes directly with Zoom. And it's doing well, WebEx. And maybe that's enough to propel the whole company. We had this company, a company that a lot of people really like. It was a company that does fiber optics that people really don't focus on. 2.6, that's IIVI. And they had a blowout quarter. So people are buying fiber optics companies, including Cisco. So there are a lot of companies that are doing well in this stay-at-home world. I can't help it. The General Mills quarter, the General Mills CEO was on. He cannot contain himself because people are baking and people are cooking and they're feeding the dog multiple times. Then they're baking some more. They're eating cereal. I mean, holy cow, they're doing things that they used to go to work and be miserable. Now they're like at home having a good time cooking. And so I think that their stay at home has some real advantages. And also you can see the skylines. How about wild animals? I saw a fox. Whatever.
Yeah. Did it have a lot of fur on it? I've noticed the foxes have a lot of fur this time. Do they always have a lot of fur? I don't know. Do they ever shed? I don't,
I'm not really familiar with their MO, frankly. Any coyotes up there, dude?
Yeah, there are.
Yeah?
That's why my dog,
you have a gun?
Scoop, has to be careful at night. I do not. No.
You ever hunted? You ever hunted?
No hunting. No. Yes, actually, once hunted.
Never
some
mind.
pheasant
It's just up there. I mean, now you got wildlife everywhere. You got bald eagles. I mean, everything's coming back. It's amazing that wildlife is. Carl, it's like real. It's like National Geographic. It's incredible what
nature finds a way.
I mean,
nature finds a way.
Air pollution, you name it, Jim. By the way, speaking of air pollution and carbon, the president tweets just now, guys. Crude oil prices going up as Saudi Arabia cuts production levels. Our great energy companies with millions of jobs are starting to look very good again. At the same time, gas prices at record lows, like a big tax cut, the best of all worlds, transition to greatness. There is some discussion, Jim, that even if you don't believe the squeeze in equities, oil is telling you that there is a rebound in global activity happening.
Yeah, well, that minus $37 was a pretty scary day. And the way that happened was it happened so quickly that most of the actual big oil companies are not nimble enough. They couldn't be down there. Believe they want to. I mean, Chevron would have loved to have been down there. It just happened too quickly. There is some demand. There's some airline demand. There's, but I would point out that most oil companies cannot break even at these prices. And it is great to not lose those jobs, but we are nowhere near the break-even level. We have to go up, let's go up another $5 before more than 6 companies can make money. Imagine that. There's 70 that lose money right here. So, I mean, yes, it's great right now that they're able to get some revolvers and do okay. But remember, this can't last. It's got to go to 32. That's where you start getting a lot of break-evens. 32.
It's a ways from here.
Yeah.
Carl, you mentioned Simon Property being, one of the leaders in terms of at least performance this morning. The stock up 6%. We mentioned it a couple of times at the top, but it's worth just quickly going over it. They talk about the fact that they have reopened 77 of their U.S. retail properties and reporting numbers, of course. David Simon, the company's chairman and CEO, as well, talking about the unprecedented challenges they're facing right now and the disruption to the business, of course, how quickly they had to pivot to address the spread of the of the virus and temporarily closed so many of their U.S. properties. What he didn't discuss at all was the Taubman deal, and that's why shares of Taubman, TCO, are down this morning because, once again, he did not handhold in any way, shape, or form, did Mr. Simon. It's a deal they entered into in the early part of February. I think it was February 10th. I mean, if they'd only waited a couple of more weeks, it might have been a very different tale. And there are those who are looking at the 10Q, and you might not make much of this if you were just sort of passing through the 10Q. But the fact that within the 10Q, they talk about it in a different way. They say that it's contractual under the terms of the merger agreement. The contractual purchase price for all of Taubman's common stock is $52.50 per share in cash, or $3.6 billion. The use of that word contractual, Jim, seems to be freaking some people out. It's sort of saying, well, this is the contractual price.
Yeah, he doesn't want to talk about this thing. I love the guy. He's like one of the meanest persons ever. That's why I really love him, I think.
He is tough, man.
He's tough. He looked at me and he goes, hey, you, $33 billion. I said, what? No, Jim Cramer goes, no, you, $33 billion. I paid $33 billion in dividends. I said, well, that's fabulous. I'm Jim Cramer. And I said, $33 billion. He's a tough guy. I don't want to be on the wrong side of him, David. So he's brilliant. He's a nice man.
Do we think this is a guy who's going to, no matter what he's got to do, is going to figure out a way to try to get out of this deal, or at least delay it as much as he can and get a price cut?
I don't know. He's also an incredibly honest, good businessman. I mean, that would not be in his nature. I mean, no one's ever thought that he's anything other than the most honest, forthcoming. I mean, I don't know how to get out of this, David.
I know, but man, the timing was just about as bad as it could possibly be.
Well, we bought a house March 22nd, so I don't know. What bad timing? I don't know.
No kidding. Another house?
Yeah.
Wow.
Yeah, maybe we should go to Rick.
All right. Yeah. All right, we can do that.
Jim.
We can do that.
Maybe we can cover that another time. Let's get to Rick Santelli on what is a very busy morning from him for his beat. Morning, Rick.
Yeah, no, I was enjoying this. I didn't really buy anything big in March, but I want to hear more. You know, if we look at CPI, there was more. You know, CPI, the headline number goes back to 1947. But core, the concept of core came 10 years later, 1957. And down 0.4 today on core. Think about it, X food and energy. You would think energy was it. X food and energy down 0.4. We never had a core number that small since 1957. So it really is enlightening. Treasuries didn't pay a whole lot of attention. Well, maybe because the Treasury keeps buying so many, although they're buying less and less. If you look at a chart for 2 weeks, you can see there is an upward trajectory to 10-year note yields as we've gone from kind of the 50s, 60s to the 60s, 70s. But it's very tame. Curve is basically around 50, 51 basis points, 10 to 2s, kind of idling right there. Now, if we look at a 1 month of 10s, we have closed basically 1 month highs yesterday, first time around 71 basis points. You can clearly see it is rising. And what we really want to see at some point is a test of 1%, 1.25%, somewhere in that area, kind of where it really started to get messy when rates started to come down, if you recall. Now, we all know that the Federal Reserve has made a play to come in and buy high-yield ETFs. Is it a good idea? Many don't think so, but they're doing it nonetheless. Now, if you look at a chart going back to the very beginning of the HYG, it started in April of 2007. You can see the whole run there. And obviously in 2009, that was the big break where it was at its worst level. Outside of March, where it's coming back and it's now idling, kind of waiting for the Fed. It's come well off its lows because it knows that the Fed is coming with some dollars to purchase that ETF. And it's going to be very interesting because they haven't purchased anything as of this point in time. Finally, the dollar index. Now, this chart goes back to mid-March. What's interesting is this is the 9th week in a row we've had at least one session close at 100 or higher. They've already had it early in the week. It slipped a bit. It's down about 0.5 cent. But that really underscores how strong the dollar index is, and ultimately it explains one reason why our inflation numbers are where they're at, because as things come in, that strong dollar actually buys us lots of things compared to other countries. Carl, Jim, David, back to you.
All right, Rick, thank you for that. We'll talk to you in a little while. We were just talking Tesla, Jim, and the president now tweets California should let Tesla and Elon Musk open the plant. Now it can be done fast and safely.
Look, I think that the key thing is the people against must presume that he runs some sort of sweatshop. They presume that he runs some sort of Tyson plant, the old Tyson before Tyson got religion. And I just think, look, trust and verify, open it, make sure that it's run safely, and let's go put these people to work. I don't know where it came about that once the plant starts, you're not allowed to look into it. I mean, the president's right. There.
Well, we're going to see, maybe Fauci will be asked about this in a few minutes. Fauci will talk to Senate Health Committee this morning at 10 a.m., as well as the heads of the CDC, HHS, and the FDA. He's going to do it remotely, Jim, as they do a bit of semi-quarantining because of some of the exposure that's been in the White House last week or two.
Well, I'm glad he's doing that. It was very unnerving to see the West Wing have people who were infected. I mean, look. We all know that it's very interesting, the open Shanghai Disney, right? So what do? They only have a meter social distancing, but everybody has to wear masks. We're into the 6 feet social distancing, but the masks are kind of optional. And the optional thing is starting to really lose a lot of, I think, gravitas. I think when you go to Costco and you got to wear the mask, every store that I went to in Long Island this weekend, you had to wear a mask. I mean, look, we know that they're not perfect. By the way, Mark Benioff has a great tweet today that talks about how they're only this good, and then they cut them down this good, but it's still better than nothing. And I do think that the Chinese understand that. I think it's interesting that their social distancing is not nearly as significant to them as it is in this country. And why is that? Because we don't know anything. Not we, them, or us. I think there is a belief that somehow the novel coronavirus has been figured out by our scientists, and that is just simply untrue.
Jim, there is a lot to back that up, it would seem, given every day we learn something new. And the medical professionals on the front lines obviously are trying to respond as quickly as they can to all the different inputs they're getting. Guys, want to mix it up a little bit here, bring on a guest that, Jim, you've had on many times as well, a company you follow closely, International Flavors and Fragrances, the company having reported numbers. It will begin its conference call soon as well. But we've got Andreas Figbig, the company's chairman and CEO, first on CNBC with us this morning. Andreas, nice to have you with us. And I want to get right to the quarter itself and what you saw, because you saw positives, of course, as a result of significant demand for ingredients and solutions, for example, in certain consumer products, packaged food, and the like. And then you also saw fragrances and cosmetics, I would assume, sales of which declined, given nobody could go into a department store, for example. So what are you doing at IFF to adjust to this new reality?
Yeah, first of all, thank you. Good morning. Thank you for having me here. We had a good quarter, and that was driven by certain categories and certainly by the ability of IFF to basically work with the supply chain. All of our 110 manufacturing factories are open, and that was a bit of a challenge, but I come to that later. What is really thriving right now is on the flavor side and ingredient side, the center of the aisle in the supermarkets, everything which is packaged foods, which goes in there. We see it also on hand sanitizers and detergents, which are really, really going extremely well. And that's driven by the demand we see in the marketplace, but also by some of the big wins we had end of last year. As you were saying, what is not going very well is in particular fine fragrances or cosmetics, or some of the food service products as well. But in general, I would say strong quarter and a good start into the year.
Yeah, given that, Andreas, why not share 2020 full year guidance?
Look, we believe that, or we see that the market is super volatile at the moment right now. And we see spikes in some categories. It goes up by 200, 300%, and others are going down. We said it's just too volatile right now, and we don't know how the recovery will happen, when all the different countries are opening up again to keep the guidance. But we will give, over the course of the second quarter, more guidance on the second quarter when we can do so. And I think it's the right thing to do for that situation. The good thing is it's a global business. We are selling our products in more than 200 different markets. And the whole COVID-19 crisis, as you well know, started in China. So we took a lot of learnings from our Chinese operations. Then it went to Europe, then finally to the US and Latin America. And that helped us to adjust. What is a big question for us right now in our consumer insight studies, what will be sustainable of these trends? So will be, let's say, all the health, the vitamins in food be a sustainable trend? Are we seeing that the people using more hand sanitizers going forward and wash as much as they do right now? That's underway. We do every year around about 500,000 consumer interviews. We really want to figure out what is important for our customers to be successful in the future.
Yeah, and we talk a great deal about what the new normal is going to look like, Andreas. What about your own workers? I know most of them are reporting to your facilities and have been throughout this. What changes have you made? What changes do you anticipate making as well in terms of how the work is getting done?
First of all, I'm extremely proud that all of our essential workers are showing up every single day in our factories and working. We have done a lot to help them to stay safe. We have split the shifts. The shifts don't touch or see each other even. We have the face mask in there. We do before they leave their homes, they do their own temperature measure. They have SOPs they are following. And that's the reason why all of our 110 factories are open and working. Even most of our labs are working with different shifts as well. The only are the office workers, which are in many countries are still home. And now gradually we are restarting the office as well. But as we find being now on Zoom here, it works very fine with people working from home as well. What we have done also is to help the frontline healthcare workers, the police departments, with some hand sanitizers. We have up to now produced more than 70 metric tons in hand sanitizers and have developed a special scent. We call it Hope 2020, which we distribute for free to all of these workers in right now 8 countries and more to come.
Andreas, it's Jim. It's great to see you, and congratulations on an amazing quarter.
Thank you, Jim.
I don't know if people understand how much of your business is the business that's really sidelined. We don't care how we smell on Zoom. So obviously you pivoted. I've always felt that was so great about your model, right? I mean, you could pivot.
We have to figure this out. And then certainly the merger with the DuPont and Embiid business is on track as well. You know, we announced it last December. We are very proud that we have announced yesterday the top leadership team, the purpose and vision of the new company. And even despite the COVID-19 situation, we are not missing a beat in combining these two companies together.
Yeah, but I love the nutrition part. I mean, I love the way you broke things down. Again, it's a great mosaic because it's a couple $1 billion product lines that are all growth mode. And I know Ed Breen's excited about it. Something you taught me early on was that we like the taste of the first thing we tasted when we were born. We are in a very insecure time, and people are at home. We want to be comfortable in any way we can. Are you seeing a resurgence of the basic taste that we got when we were born?
Yes. Maybe not when you were born, what you experienced in your childhood. Yes. Macaroni cheese in this country, for example, and other tastes all over the place. I think that's the reason why people are now going back to some of the big brands they know for years and for decades.
Incredible.
Andreas, finally, you mentioned the DuPont deal, of course, on track, as you've said, to close in the early part of 2021. Your stock got whacked after you announced that deal. It has come back since, in part on the strength of the results themselves. But what did the market not appreciate, understand, or not like about that deal that it seems to have come around to appreciating now?
I think there are a couple of things. The first, we had to understand what is the strategic logic behind the deal. Secondly, we had to discuss the financing, how we really want to make it happen. And we acquired 2 years ago another company called Frutarome, And we had to explain that we basically will finish the integration of Fruitrom until the third and fourth quarter this year, and then basically go first quarter next year into the next big integration exercise. And I have to say, looking at the first quarter of both companies, whether it is DuPont NMB or ours, it shows there are two essential businesses which will be combined here, and we're pruned to growth going forward, even in that environment. On top of it, we are now in the position to really do integrated solutions where we can bring a lot of these ingredients together. Let me give you an example. We see right now a lot of plant-based burgers, plant-based meat, even with the meat crisis in the US, there's a lot of demand. Now as a company, we are not just flavoring that. We can do the plant-based protein, which we get. We can bring the texturizers into it. We basically can do almost the whole product here for our customers. And I think this is a very strategic advantage we are having against all of our competitors.
Well, Andreas, we always appreciate your updating us on those various efforts. Thank you for joining us this morning.
Thank you. Take care. Stay healthy.
You too.
All right, guys, Dow did get a pop at the open, up 160, but now settling back to the flat line along with the S&P as Dr. Fauci's getting ready to testify in front of the Senate in just a few moments. Don't go away.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted...
Get yours.
Watch the markets here, keeping some powder dry as we await Dr. Fauci's testimony in front of the Senate in a few moments. In the meantime, the president tweeting on everything from oil to Tesla to negative rates. We're back in a minute.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hey, it's Jacoby here from Jalen and Jacoby, and after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air, and they'll be available on the Jalen and Jacoby podcast feed